To the head table. Good morning. Good morning, Barita shareholders. Barita Investments Limited's 48th Annual General Meeting is now called to order. Madam Secretary, do we have a quorum?
Good morning. Good morning, Barita shareholders. And good morning, Barita shareholders. Yes, Mr. Chairman, I can confirm that we have a quorum.
The Secretary has confirmed that we have a quorum and the meeting is therefore properly constituted. Good morning again, everyone. I am Mark Miles, Chairman of the Board of Directors of Barita Investments Limited. I want to extend a very warm welcome to all those joining us today. I would like to especially welcome our shareholders whose confidence, loyalty, and continued support have been instrumental in shaping Barita's journey and success over the years. Your trust in our vision, your belief in our people, and your partnership in our growth have enabled us to navigate challenges, embrace opportunities, and to continue building a strong institution. This AGM is an important opportunity for us to connect with you, to account for our stewardship, and to reaffirm our commitment to creating sustainable value for all our stakeholders. We are truly grateful for your presence and your ongoing engagement with the company. I would also like to extend a special welcome to our distinguished guests here today, Senator Ramon Small Ferguson, Chief Executive Officer, Barita Investments Limited and Managing Director of Barita Unit Trust Management Company Limited, and Mr. Keith Senior, Assistant General Manager at the Jamaica National Group Limited. Welcome. To all our special guests and our shareholders attending in person and those viewing online on Barita's website, YouTube, and Instagram, thank you for taking the time to be with us. Barita has continued to evolve and grow. And none of this would have been possible without the confidence and support of our shareholders. The past year has brought with it a number of significant developments that have strengthened our business and advanced our strategic ambitions. We are excited to share with you some key achievements since our last AGM that have contributed to our continued success. As our shareholders are aware, effective April 11th, 2025, the Cornerstone Group was reorganized under a court-sanctioned scheme of arrangement, resulting in Barita having a new parent, Barita Financial Group Limited. Barita Financial Group Limited was issued a license by the Bank of Jamaica to operate as a financial holding company, an FHC, on March 17, 2026. This milestone formally establishes BFGL as the financial holding company for Barita Investments Limited, its regulated subsidiaries, and what is now Barita Merchant Bank Limited, formerly Cornerstone Trust and Merchant Bank Limited, providing a clear and robust structural framework for the financial group's expanding operations. In January 2026, Barita completed the acquisition of 100% of the issued ordinary shares of Barita Fund Managers Limited, formerly JN Fund Managers Limited. This acquisition represented a strategically important step in scaling Barita's asset management franchise and expanding its presence in a key growth segment of the financial services market. Building on its growth and sustainability strategy, Barita has diversified into real estate development, establishing a strong pipeline of projects across Kingston, St. Mary, and St. Anne. Barita also expanding its board of directors to include Dr. Marlene Street Forrest, a member of the Audit Committee and Corporate Governance and Conduct Review Committee, who brings a wealth of experience having worked in senior management positions at varying private and public sector organizations in Jamaica and overseas. BOJ gave its non-objection for Barita Merchant Bank Limited to introduce a new mobile wallet, BRIC, by Barita. A further regulatory milestone supporting the advancement of the group's One Group strategy and broader digital banking journey. Cornerstone entered into a strategic partnership with Proven Management Limited. Together, the Cornerstone and Proven platforms span banking, investment banking, asset management, real estate development, real sector investments, and financial technology, therefore providing a strong foundation for scale, resilience, and expansion across Jamaica, Barbados, Cayman, Bermuda, British Virgin Islands, the Bahamas, St. Lucia, the United States of America, and Canada. Each of these developments represent an important step forward for Barita, and you will hear more about them later in the meeting. Unfortunately, there have also been some moments of loss. Since our last meeting, we said our final farewells to two valued members of our family and extended community. Mr. Arnold Aiken, who held the positions of Cornerstone Shareholder, Director of Barita Merchant Bank Limited, Cornerstone United Holdings Jamaica Limited, as it then was, and Cornerstone Financial Holdings Limited, and Mr. Orrit Staple, a vibrant and committed shareholder. With your permission, I would now like us to observe a moment of silence in their honor. Thank you. As is customary with our AGM, we will undertake a voting process during which our shareholders will have an opportunity to vote on a number of matters. To ensure this process is as smooth and efficient as possible, please allow me to go over some important details regarding the voting process. During the business segment of the AGM, where shareholders present in person, let me restate that. During the business segment of the AGM, where shareholders who are present in person will vote on the proposed resolutions, the company secretary will read each resolution aloud. Shareholders wishing to support a resolution will be asked to formally propose and second the motion by using the microphones located on either side of the room. When doing so, please clearly state your name before proposing or seconding the resolution. Once a resolution has been duly moved, shareholders will be given up to 2 minutes to cast their votes by raising their hands. At the close of the voting period, I will announce the results. Please note, only shareholders and not account holders are entitled to vote. To ensure the meeting proceeds in an orderly manner, we have allocated 30 minutes for a designated question and answer segment later in the meeting to address questions. Shareholders wishing to pose a question are invited to approach one of the microphones located on either side of the room, state their name, and then ask their question. To ensure fairness and allow as many shareholders as possible the opportunity to participate, we kindly request that shareholders pose no more than 2 questions. We thank you for your cooperation in advance, and we look forward to a productive and engaging AGM. We will start the formal proceedings with a prayer, and I ask Mr. Lerone Palmer, Vice President, Group Compliance, to lead us in prayer.
Good morning, everyone. All right, may I invite you to just bow your heads as I pray? Father, we want to thank you this morning, firstly, for the gift of life and the ability to be here, to be present, to be in our right minds. We pause at this time to invite your presence into this annual general meeting for Barita Investments. We pray, Heavenly Father, that your spirit be with us and that everything that is done today will be done orderly and to your honor and to your glory. We thank you for the leaders of this great institution. We thank you, mighty God, for the wisdom, the knowledge, and the strength that you have given them thus far. As we move into another season of this business, we pray, God, for your continued vision for their lives. And I pray, Heavenly Father, that you continue to allow every vision that is written as you have commanded, Heavenly Father, to be manifested. We thank you even for our staff members who have worked diligently. We thank you for our directors who have served diligently. We pray, Heavenly Father, that you continue to bless and to keep this noble institution as we honor your holy name, as we say thank you in Jesus' name.
Amen. Thank you, Laron. This brings us to the notice of the meeting. All shareholders are deemed to have received a proper notice of the meeting, as the annual report and the notice of AGM were first published online on the Jamaica Stock Exchange's website on June 11th, 2026. Subsequent notices were also issued in the media on July 1st and 8th, 2026, advising of the publication and the means by which these documents were made available to shareholders. I therefore now ask a shareholder to propose and another to second the following resolution. Please identify your name prior to doing so. That the notice convening the meeting, having been previously circulated, be taken as read. May I have a proposal? Therese Kettle, thank you. May I have a seconder? Jeffrey Romans, thank you. Thank you, shareholders. All in favor of the resolution, please indicate your vote by raising your hands. All against, please indicate your vote by raising your hands. The shareholders have voted in favor of the resolution. I declare the motion carried. Thank you. Madam Secretary, are there any apologies?
Thank you, Mr. Chairman. Yes, I'd like to convey 2 apologies on behalf of Director Paul Simpson, CD, as well as Director Duncan Stewart. Both are unavoidably absent from the meeting with apologies. Thank you.
Thank you. Please be advised that we have received 2 valid proxies for this AGM. Given that the meeting is being held in person, the proxy register is available for viewing, and you may do so at the JCSD's registration desk at the entrance of the room. Shareholders may also view the proxy register at a later date by making arrangements with our registrar, the JCSD. At this time, please allow me to introduce the distinguished individuals seated at the head of the table. Starting with Stephanie Sterling, Group Head of Legal and Company Secretary. Peter Goldston, Director and Chairman of the Corporate Governance and Conduct Review Committee. Dr. Marlene Street Forrest, Director and Chairperson of the Barita Foundation. And Senator Ramon Small Ferguson, CEO, Barita Investments Limited, and Managing Director of Barita Unit Trust Management Company Limited. Their collective expertise and leadership have contributed significantly to the company's success. It now gives me great pleasure to introduce the Board of Directors of Barita Investments Limited. As previously mentioned, I am Mark Miles, the Chairman. Joining me on the board are a group of highly accomplished individuals, each bringing a wealth of diverse expertise and valuable insights to the organization's strategic decision-making process. Together, we form a cohesive team dedicated to steering Barita Investments Limited towards continued success and growth. The other directors are Paul Simpson, CD, Deputy Chairman. Carl Danville, Chairman of the Audit Committee. Duncan Stewart, Chairman of the Board Investment Committee. Peter Goldston, Philip Lee, Robert Drummond, Jason Chambers, and Dr. Marlene Street Forest. The directors who are in attendance and are seated in the first row, with Director Drummond joining us virtually. I would like to take this opportunity to acknowledge the directors' commendable stewardship of the company as we continue to be united in our shared purpose. Thank you. I would also like to acknowledge the following person: our auditors, BDO Chartered Accountants, represented by Mr. Balvin Van Riel, a partner of the firm. Our registrar, Jamaica Central Securities Depository, represented by Mrs. Annette Puran-Hedman, Mrs. Chantel Scarlett Dennis, and Mr. Anthony Dixon. Members of the senior executive team are also present, and I'd like to acknowledge Mr. Jason Chambers, Chief Investment Officer, Cornerstone, Mr. Dane Broadbaugh, CEO Designate of Barita Financial Group Limited and Acting CEO of Barita Merchant Bank Limited, Stephen Philibert, Group Financial Officer, BFGL, Mr. Bernard Stocker, CEO, Real Estate Development, Cornerstone USA, Mr. Stefano D'Ambrosio, Chief Innovation Officer, Cornerstone USA, Mr. Jeffrey Romans, Chief Risk Officer, BFGL, Ms. Stephanie Murdoch, Chief Human Resource Officer, BFGL, Ms. Sabrina Freeman, Chief Audit Executive, BFGL, Mr. Richardo Williams, Senior Vice President, Research and Asset Management, Barita Investments Limited, and CEO, Barita Fund Managers, Ms. Tanika Chance Wilson, Executive Director, the Barita Foundation. I would also like to welcome Mr. Peter Bunting, Member of Parliament and Opposition Spokesman for Productivity, Efficiency, and Competitiveness. Welcome. Ladies and gentlemen, good morning. The 2025 financial year was, for Barita Investments Limited, a year of disciplined transition. Coming off the exceptional, largely non-recurring gains of the prior period, financial year 2025 returned the group to a more normalized earnings base, and in doing so, brought the underlying strength of our core franchise into clearer view. The backdrop, both globally and locally, remained one of persistent uncertainty. Shifting monetary policy expectations, geopolitical tension, uneven global growth, and the lingering aftershocks of climate disruption at home. Yet against these forces, the group demonstrated a resilience anchored in prudent risk management, strategic diversification, and the steady evolution of our business model. Our results reflect that balance of resilience and realism. The group delivered net operating revenue of $8.7 billion and a net profit after tax of $3 billion. While net profit declined 21% relative to financial year 2024, that comparison must be read in context, as the prior year carried extraordinary alternative investment gains that were one-off. The more telling signal lies beneath the headline. Revenue from our traditional business lines rose 21%, with fees and commissions up 12% and a 7% reduction in our cost base, underscoring the robustness of our client relationships and the stability of our core. The group closed the year with a capital adequacy ratio of 21.3%, more than double the regulatory minimum, and an equity base of $35.1 billion, representing the profile of an institution built to absorb volatility rather than be defined by it. The macroeconomic environment over the year was shaped by cautious optimism, with global growth near 3.2% and inflation moderating but uneven. Both the Federal Reserve and the Bank of Jamaica transitioned toward a more accommodative stance, easing policy rates by roughly 150 and 125 basis points, respectively. That shift supported a recovery in net interest income as our variable rate funding repriced lower faster than our earning assets. Since the close of our reporting period, the environment has grown more complex, and I would be remiss not to address it directly. The passage of Hurricane Melissa in late October was a national event of profound consequence, with damage and losses estimated at roughly $1.95 trillion, more than half of national output and several times the scale of Hurricane Gilbert. The domestic economy contracted sharply over the last 2 quarters, and a full recovery may take some years. Compounding this, conflict in the Middle East drove a pronounced spike in global energy prices. Feeding costs pushed inflation that prompted the Bank of Jamaica to hold its policy rate at 5.5%. Encouragingly, the framework agreement reached in mid-June has since relieved much of that energy premium, and should it hold, the easing in oil markets bodes well for global inflation and by extension for interest rates, a welcome tailwind for businesses as we move into the next financial year. The economic environment had direct implications for our business lines, but through financial year 2025, we managed deliberately across that transition, expanding our investment portfolio, rebalancing loan exposures to improve liquidity and capital efficiency, and advancing the transition of our alternative investment strategy. Disciplines we have carried forward into the current financial year. None of this occurred by accident. It is the product of a multi-year effort to fortify our balance sheet, elevate our governance, and modernize our infrastructure. The themes we committed to across 2022, 2023, and 2024, namely resilience, governance, operational excellence, digital transformation, and talent development, matured into institutional habits in 2025. We reaffirmed an A+ credit rating from CARICRIS, advanced the reorganization of the wider group under the Banking Services Act, and secured the financial holding company license, each positioning us for the next phase of growth. Beyond these achievements, CARICRIS also upgraded the ratings of our parent, the Cornerstone Group, with Barita cited as its strongest subsidiary, an external endorsement of the foundation we have built. As we look to financial year 2026, our priorities are clear and our posture deliberately measured. We will optimize performance across our business lines, deepen client centricity through stronger digital channels, reinforce our capital buffers, and continue investing in operational excellence. The near-term environment will demand patience. Domestic growth is recovering from a severe shock. The path of rates remains contingent on developments beyond our shores, and the local equity market continues to trade with low conviction. In such conditions, the prudent course is the one we have consistently chosen, namely to protect and compound the strength of our core revenue engines, deploy capital deliberately, and decline to chase momentum the fundamentals do not support. Each chapter in Barita's recent history has asked something different of us, whether resilience, innovation, prudence, steadiness, or courage. In 2025, it asked for all of these in equal measure, and the commitment to discipline, execution held firm across the organization. To our clients, shareholders, regulators, and partners, your trust remains the cornerstone of our progress, and it is with deep gratitude that we continue to build an institution worthy of it. Barita enters the year ahead grounded in strong capitalization, a resilient business model, a disciplined strategy, and a team that understands the responsibility of the work before us. We remain committed to being a stabilizing force in Jamaica's financial landscape and a catalyst for the recovery and prosperity of the community we serve. Financial year 2025 reaffirmed a simple truth. In markets, extraordinary gains may come and go, but disciplined strategy, resilient business lines, and balance sheet strength endure. With clarity, conviction, and optimism, we move forward. Mr. Ramon Small Ferguson, our CEO, will provide further details and insight into our strategic initiatives and operational milestones achieved during the year. Following Mr. Small Ferguson, Mr. Stephen Philibert, Group Chief Financial Officer, will guide us through the financial performance of the company. Together, their presentations will provide comprehensive insight into our organization's current standing and future endeavors. Over to you, Ramon.
Thank you very much, Chairman. Good morning, everyone. It is indeed a privilege for me today to sit here at our 48th annual general meeting to discuss the business of our company with you. I'd like to associate myself with the protocol list that the chairman introduced into the record before getting into the substance of my presentation. So today's proceedings are set out on screen. Don't be intimidated by the detail that's set out there, but there is much to discuss, and we'll seek to navigate it with clarity and brevity as necessary. My leg of the relay today is to take us through a brief discussion on the economic landscape. Then we will speak a bit about our strategy, and from there we'll transition to Stephen, who will discuss the historical numbers, both the audited financials for the year that we're here to discuss, and just to give us a reminder of how the company has performed year to date. So I'll start out with a discussion around the economic landscape. Let's see if I can get my presentation back up in front of me here. One moment. It's on screen on this side or that side? Oh, yeah. I see we have some technical please bear with us a moment. Chairman, so yes, we are back up and running, and I'll pick up where I left off. I'm just moving the presentation forward. Here we go. So the first point of discussion that I'd like to lead us through is just to remind shareholders of the group structure related to Barita Investments Limited, the entity in which they are invested, and to introduce briefly some key members of the leadership team. On screen, is the group corporate structure. Right? And at the top of that group corporate structure, pursuant to the reorganization that the chairman mentioned earlier, is Cornerstone Financial Holdings Limited, which is the ultimate parent company of our group. Below CFHL is the fairly newly incorporated Barita Financial Group, the financial holding company, the entity that holds that financial holding company license that was granted earlier this year. And that entity, pursuant to the reorganization, is the new parent company of Barita Investments Limited and holds the most substantial shareholding in our company. It owns 72%. Alongside Barita Investments Limited now sits our sister company, the newly minted Barita Merchant Bank Limited, the banking arm of our group. And below Barita Investments Limited is Barita Unit Trust Management Company, which has been around for over 30 years, managing collective investment schemes here in Jamaica. And the newly added Barita Fund Managers Limited, formerly JN Fund Managers Limited, our asset management and pensions management subsidiary. On screen is the group, and in this structure, shareholders sit alongside Barita Financial Group Limited as shareholders of Barita Investments Limited. Moving ahead. Seems I'm having some challenges with this clicker here. Let's go on forward. Just need some assistance in moving ahead. All right, so it seems I now have control. So I just want to take us through the senior management team, some of which would have been previously introduced either in their capacities as noted here or as directors or in other roles within the group. On screen is our founder, Mr. Paul Simpson, CD. He's also the president and CEO of the Cornerstone Group, and in essence, the architect of the group as it sits now. Beside him is Mr. Jason Chambers, who also serves as a director of Barita, and his substantive role is Chief Investment Officer of the Cornerstone Group. Moving ahead, we see myself. I won't introduce myself, but beside me is Mr. Bernard Stocker, one of the newest members of our group, who leads our real estate development vertical, sitting in Cornerstone's USA operations. Next is Mr. Dane Bradbaugh, who is the CEO designate of Barita Financial Group Limited, our financial holding company, and is the interim or acting CEO of Barita Merchant Bank. Beside him is Stephanie, who was previously introduced, our group head of legal, and Jeffrey Romans, our chief risk officer in the Barita Financial Group. Moving forward, is Miss Sabrina Freeman, who is our Chief Audit Executive, Mrs. Stephanie Murdoch, who is our Chief Human Resource Executive, Mr. Stephen Philibert, who you will hear from next, who is the Chief Financial Officer of the group. Mr. Lerone Palmer, who led us forward expertly in prayer. Mr. Chirag Mehta, who is the Chief Experience Officer of the Cornerstone Group, and Mr. Gavin Jordan, the Chief Operating Officer. Mr. Stefano D'Ambrosio, he will hear from later in the proceedings, is the Chief Innovation Officer of our group, and Mr. Kashif Hewitt is our Head Engineer, a critical part of the current and future operations of our group center around technology. So these two guys are two very critical people in our architecture. The Barita executive team is rounded out by Mrs. Anne-Marie Walker-Cato, who leads all things finance as SVP Finance. Ms. Therese Kettle, with whom many of you would be familiar, who leads our investment banking business line as Senior Vice President. Mr. Dave Dixon leads our sales and service, our branch network, as SVP. Mr. Richardo Williams is our SVP in charge of asset management and research and has recently been installed as the interim CEO of Barita Fund Managers Limited, our newest subsidiary. Mr. Ian Anderson is Vice President, Information Technology. Mrs. Sonia Owens, with whom many long-standing Barita investors and shareholders would be familiar, is our Vice President, Treasury and Financial Institutions. And moving ahead, we have Ms. Carrie Bayliss, VP for Strategic Business Development and Investor Relations. Ms. Tankita Chance Wilson, who was introduced earlier and who will be later in the presentation, the Executive Director of the Barita Foundation. Ms. Sansia Thompson, who is here with us, who is our VP Premium Wealth and Corporate Solutions. And finally, Mr. Lucian Leach, who supports us as VP for Risk Management in Barita Investments Limited. So that rounds out the senior team. And I'll now jump a little bit into talking about the state of the economy, just to build on what the chairman would have said earlier. So pressing ahead to speak a bit about the economic landscape. So global growth and the outlook for global growth is set at around 3.1% for 2026 and expected to rise modestly to 3.2% in 2027. I mean, it's a much slower, more fragile regime that we're experiencing now globally. And the underlying factors really center around geopolitics. There's a Middle East conflict, which really has many persons who have the responsibility of deploying capital, whether it's entrepreneurs, whether it's investors, whether it's governments, has them really skittish in a sense, hesitant to commit fully. The Federal Reserve and other central banks around the world have been very cautious. The Fed actually had their fourth consecutive hold in their June meeting. They've transitioned leadership there. And I mean, I think it is solidifying a higher for longer pathway as it relates to monetary policy and more specifically interest rates. Inflation in the United States hit a 3-year high in May at 4.2%. And while it's largely energy driven, and since then we have seen energy prices come down, if we look at WTI crude as a headline, core inflation, which strips out the effects of energy and food, held firm at about 2.9%. So still elevated relative to long-term targets, but certainly the effects of movements in energy prices are apparent from the difference between the two. So, an interim deal between the US and Iran, which was signed in the middle of June, has caused a significant pullback in energy prices. Oil prices are now in the 70s from a peak of 120. And despite that fact, we think that things remain fairly fragile. So any optimism that is held is cautious at best, because of course there is still the risk associated with potential flare-ups as things move forward. So we want to ensure that this deal holds and that things are particularly entrenched before moving forward with great optimism. Let me get to my next slide here. So, with that global backdrop, I want to talk a little bit about the idiosyncrasies playing out in Jamaica. So certainly that cautious undertone has translated into how our own central bank is viewing things, given the inextricable link between Jamaica and the global economy. But of course, we are operating in a post-Melissa environment, and that I think has been the greatest determinant of our growth rate. We've seen where we saw a contraction of 4.1% in GDP in Q1 of 2026, directly linked to the effects, the lingering effects of Hurricane Melissa. Headline inflation is up to 5.5% in May, certainly more muted than some would have anticipated. Net international reserves remain very robust from a nominal perspective at 6.5%, with policy rates being held in June, similar to what would have happened with the Fed, at 5.5%. So, the growth data isn't surprising given the lingering effects of the hurricane. The agricultural sector contracted by almost 20%. Mining was down almost 24%. And with damage estimated at almost $2 trillion, you can anticipate that the recovery associated with Melissa will be a multi-year matter. Right? The truth is that the large, I'd say, contributors to future years of growth will need to be a combination of collaboration between the government and the private sector. In the last quarter, we would have seen legislation passed to give effect to the entity meant to lead reconstruction and resilience here in Jamaica, NARA, and the private sector appears to be well suited and prepared to collaborate with the government over the course of the ensuing years to seek to bring the economy back to former levels of growth and hopefully surpass those levels of growth. So, the recovery will need to be central to future quarters of growth here in Jamaica. So I want to talk a little bit about the strategy that has not only underpinned our historical performance looking at financial year 2025, but will also be central to driving future performance for our company in 2026 and beyond. Moving ahead. So as you see there, I'm going to start out talking a little bit about our journey and what has brought us here. If this slide will ever move forward. Let me go one back. Seem to have jumped ahead. Here we go. So let me remind us a little bit about the more recent journey for our company, what has taken us here to the present day. And we want to start at the point of the acquisition of Barita by Cornerstone in 2018, which has really been the catalyst characterizing our recent years of performance. In August of 2018, Cornerstone bought a 75% stake in Barita and had a transformation strategy really set out that was executed in the ensuing years up to this point. The first component of that strategy was to capitalize our business, really giving it the endowments needed to take the business forward into the future. So during 2019 to 2021, we were able to mobilize and raise almost $35 billion in permanent equity capital, infusing it into Barita and making it one of the largest securities dealers in Jamaica, certainly the largest dealer by shareholders' equity. So that size has really been central to our ability to execute over the last several years. We complemented that size with infusing a lot of human capital as well. So the team that I introduced earlier, many of us were beneficiaries of that search for talent, and we have in turn been combined with the capital to really bring the company forward on this journey. That was complemented by a lot of work being done on our brand. Certainly, we inherited a very strong, trusted brand name here in Jamaica, but it was important for us to bring the good news of what Barita could do to the people of Jamaica. And in 2020, that was recognized, with Barita being highlighted as Brand of the Year. In the 2022 to 2024 period, which was really characterized by post-pandemic effects, it was important to us to diversify your business. And a component of that, a big component of that, was the build out of our alternative investments platform, real estate, really expanding the governance of the entity, which was recognized by external validation in terms of material improvement in our governance score to A from CC when the company was acquired. We put together a very strong enterprise risk architecture. Dane, who is now the CEO designate for the financial holding company, and Jeffrey, who is his successor as chief risk officer, were central to that. And we really invested heavily in our digital capabilities. There are several components of that to include BOSS, for example, our online IPO application software. And as we have now moved out of the capitalize and diversify phase, we have been focused now heavily on integrating with our financial holding company reorganization done, with the acquisition of GN Fund Managers done, with us being at the start of this strategic partnership with Proven, with our intentional integration of our captive group via our one group strategy. We are now ready to consolidate this business and grow it going forward from 2025 and beyond. Over the last 8 years, minority shareholders have experienced a 7-fold growth in their investment if they had invested alongside Cornerstone at the acquisition date. And we intend to continue along that pathway of value creation for all the shareholders of Barita. Moving forward, I want to talk a bit about the 5 pillars that we have been very public about, on which our strategy has been built and executed over the last several years. The first is business line optimization, and that has been really focused on a deliberate refinement of our revenue mix, ensuring resilience, diversification, consistency, really sharpening our focus on the performance of our asset management and investment banking businesses. We've complemented that, as the chairman alluded to, with a focus on the customer. We've been deepening our understanding of our customers and really trying to personalize our approach to different customer segments. We've complemented that with a focus on efficiency, productivity, really doing more with the same, and really producing a better quality with the resources that we've invested in the business on behalf of our stakeholders. Underlining that has been a focus on risk and compliance, protecting the enterprise that we have built, and we've invested in people we've strengthened our frameworks. We've continued to focus on improving governance to really fortify the business that has been built. And finally, having built scale, we have seen inorganic expansion as an avenue for growth, and that has been apparent through the recent acquisition of AGM Fund Managers Limited. So through these pillars, we have been seeking to deliver on the core promise that we have made to you as shareholders, to deliver consistent returns. And there has been some recognition of that. I spoke earlier about the fact that the JSE Corporate Governance Index has recognized our improvements in our governance activities. It has moved us from a double C score to an A score. We got an 88 out of 100 score last year. We're looking to move squarely into the 90s, and there's always more to do. We have invested heavily in technology and modernizing the underlying technology that drives this business. We have continued to take advantage of our structure through the reorganization of the group to align ourselves with modern regulatory posture and bring all our financial services under one single platform. We have, through the investment banking business, mobilized tremendous capital on behalf of our clients, over 130 billion Jamaican dollars raised up to the end of the last financial year. And we have really focused heavily on client protection. So we've strengthened KYC verification, data governance, in keeping with modern regulatory and legislative changes, with a focus on securing our clients. And finally, we've continued the trend of investing in people. That's leadership development, governance training, technical upskilling across the entire team. That has been central, again, to what has started this journey when we focused on capitalizing the business initially with both funding and people, and that will remain central to the future of our organization. So let me move ahead. So what you have, shareholders, is a foundation that will take us into the future that has been built on discipline. If I were to reduce it to three things, they're on screen there. There is a capital strength that I mentioned before, this large capital base, and very robust capital adequacy. It's double the regulatory minimum. We have a high investment grade rating from CARICRIS, strong external validation. There is a focus on governance and risk management, as evidenced by the high governance score, the best in class risk management practices. We have a 3 lines of defense model and a holistic enterprise risk management architecture. And you have the diversified earnings base that we have built, the various lanes of the platform. It's alternative or traditional investments that we believe are now central to taking us forward into the future. And with that, I'll talk a little bit about the next phase. Bernard, who is here, will be speaking to you about how we intend to take the real estate element of our strategy forward in terms of our platform that we would have cultivated in the last several years. But with respect to private credit and equity, having built and honed our skills in origination, cultivating a number of deals through the pandemic and post the pandemic in this space, it's our intention to take elements of that strategy to the public over the course of the next 12 to 24 months, right? It's our intention to really make available the kind of returns that we've been able to generate for the entity and its shareholders available to the public, and that's the next phase of this strategy. And with that, in closing, the ultimate objective, shareholders, is unlocking long-term value for you all. Right? And we see the core pillars of our strategy as articulated prior being central to that. Business line optimization will deliver a more resilient and consistent business for you. Deepening our focus on clients will enhance the relationship-driven business that we take forward in the business. The risk management and capital buffers will protect the enterprise that we have built on your behalf. And infusing technology and operational excellence will in turn drive efficiency over the long term. So our strategy in this new financial year, 2026, has really been built on the firm base of our strong capitalization that has really driven resilience in the business, the increased diversification, particularly from our new acquisition, the discipline that we have taken forward, and the faith that we have in the leadership team that has carried this business through several different market conditions. So we're excited about the present and we're excited about the future. Right? And with that, I think I've got to the point where I'm going to hand over to Stephen to speak a little bit about the past, to talk to us about our historical financial performance.
Good morning, shareholders, special guests, and I'll also endorse the protocols observed at the start by our chairman. It's my pleasure to take you through our financial results, first for the year ended September 2025, and then for the 6-month period through March. So we'll start with the results snapshot that should be on your screens. We'll start on the bottom row. Both the chairman and the CEO have spoken about the importance of core earnings for us and the focus that we've placed on ensuring that we bolster certain key elements of revenue. And you'll see on the left of the bottom row, the net interest income. Net interest income has grown 72% over the prior year, and that has to do with the improvement in the interest rate environment, which was mentioned earlier, likewise in the chairman's report. The fees and commissions income up 12% to 4.2 billion, and that's comprised about 50-50 in investment banking, about 2 billion for that, and our asset management fees of about 2 billion as well. So these are two core elements of income that we're pleased to see increasing. We also have the gain on investments, which is down year over year, attributable to one-off gains in the prior year. But it's important to note that while it's down, if you look at the split between the realized component of it, that is actually up to 1.8 billion from 1.4 in the prior year. The other component of it, the unrealized, is chiefly attributable to our exposure to alternative investments and primarily real estate. Those are gains that have to do with the repricing of value in those assets, and they're more passive income. They're subject to the movements in those markets, and we don't consider them as core. So the net effect of those is a decrease in net operating revenue, which you'll now see on the top row of the tables, by about 1.3 billion, from 10 billion in the last year to 8.7 in the current year. Between net operating revenue and net profit at 3 billion for the year versus 3.8 in the year before, we have the expenses which are not reflected, but
operating expenses reflected a decline of 7%. And the main components there, of course, are the staff costs, which is up about 2%, the administrative costs up about 4%, and then the impairment costs, where we had a decline. So in the staff costs and administrative expenses, we see increases that are lower than inflation, representing the focus that we have on cost management. And then that net profit translates earnings per share for the year of $2.51 relative to $3.17 in the prior year. So we'll take a further look here at the revenue composition. In the pie chart, you will see the largest component being the fees and commissions income. I made reference to the two main contributors to that figure, and we're pleased to see that it's grown to almost half of our revenue pie chart. You'll also see the net interest income at 13%, and that is expanding as we have the return to more accommodative interest rates. Gain on investments that will have shrunk as we did not have that recurrence of the significant one-off gains from the prior year. And then on the right-hand side, you'll see a delta chart. That is to say, it is showing you the difference year over year in the revenue component. So again, you see the positive contribution from net interest income and from fees, each 400 odd million. And then the gains on investments has been broken into that split that I made reference to earlier, where we see the realized gains having increased about 445 million, while unrealized gains is down about 2.5 billion. And that, as we've discussed in other forums, was expected. We didn't anticipate a repeat of the kind of increases that we had seen in the prior year. So for the 5-year performance charts here, we're focused again on this question of core earnings and net interest income. You can see where it had been at about $1.6 billion level in the 2021 and 2022 financial years, and then took a dip, which is of course related to that global change in central bank policy with an increase in rates because of the inflation that was present in most nations at that point. And what you have there is you have a quicker repricing or a quicker effect of those higher interest rates on your liability side, that is to say on your cost side, than on your asset side. Now that the rates are coming back to where they were, they're becoming more accommodative, we're seeing the reverse of that effect. Fees and commissions income, I mentioned just how pleased we are about that trajectory. We did have an unusually good year in 2021, which you'll see as the leftmost bar on that chart. The prior year, 2020, although it's not shown, was about 1.8 billion. So that gives you a sense of just how much of a jump there was between 2020 and 2021. But after that, we see the steady trend of increase in our fees and commissions income. Balance sheet and capital. The bar chart highlights the continued growth in total assets, going from 90 billion in 2021 all the way to just under 150 billion for 2025. And of course, the shareholders' equity has been consistently significantly higher than FSC minimum. You'll see where it's been between about 32 to 36 billion across that 5-year period. It currently sits at a capital adequacy ratio of 21.3%, which is about double the requirement, or a little over double the requirement. And then here we have a quick picture of the earnings per share over the 5-year period and dividends paid. And for the dividends paid, you'll note that FY 2022 was an outlier year. So again, we had that unusually strong outcome in 2021, which contributed to a very
high dividends paid in 2022. Part of that related to the year before it. But if you take out that outlier year, what the picture is showing you is a very consistent payment of strong dividends to our shareholders, which we're very pleased about. So I'll now move into the 6-month performance for the current year. We have the net operating revenue up 36% to 4.9 billion from 3.6. That's comprised of net interest income, which is up 145% to 937 million from 382. So again, that trend that I mentioned of the reversal of the prior faster repricing of liabilities over assets. So now we're experiencing the benefit of the reversal of that. Fees and commissions income also continues to climb, up 9% to 2 billion from 1.9 in the year before. And gain on investments also up 50% in this case to 1.9 billion from 1.2. So in this case, the realized gain is actually steady year on year, and we've seen a better outturn this year in the unrealized portion of it that relates to the alternative investments. That again is subject to market conditions. So net profit up 17% to 1.4 billion, and that translates earnings per share of $1.15, similarly up 17% relative to 98 cents in the prior year. Just a quick snapshot again at that pie chart. So we'll see where the gain on investments, because of that 50% increase, has expanded again within the pie, but we don't expect that to be a consistent item. It all depends on how the market conditions are for those alternative investments to which we're exposed. And then the delta chart is shown again, reflecting increases in all the material revenue lines. Balance sheet picture, we'd see a significant improvement in total assets now to 180 billion, just under. That's up 20%. And of course, this is driven significantly by the addition to the group of Barita fund managers, which Raman had referred to earlier, and Chairman both referred to it, with 100% acquired in January of 2026. So while we didn't have it for the entire 6 months, it was accretive to the bottom line of the group. It adds about, over 500 billion in assets under management to the group. All right, and we see shareholders' equity closing that 6-month period at 36.4 billion. Capital adequacy ratio actually up relative to the year end at 24.4%. And I think that brings to a close this segment.
Thank you.
Thank you, Stephen. I now ask the representative of BDO Chartered Accountants or Auditors, Mr. Balvin Van Riel, to present the auditor's report.
Thank you, Mr. Chair. Good morning, everyone. Still morning. Independent Auditor's Report to the members of Barita Investments Limited. Report on audit of the financial statement. Opinion. We have audited the consolidated financial statements of Barita Investments Limited and its subsidiary, the group, and the financial statements of Barita Investment Limited standing alone, the company, set out on pages 8 to 103. And the group's and the company's statement of profit or loss and other comprehensive income, changes in equity and cash flows for the year then ended, a note comprising material accounting policies and other explanatory information. In our opinion, the company financial statements give a true and fair view of the financial position of the group and the company as at 30th September 2025, and of the group's and the company's financial performance and cash flows for the year then ended in accordance with IFRS accounting standards and the requirement of the Jamaican Companies Act. Basis for opinion. We conducted our audit in accordance with International Standards on Auditing, ISA. Our responsibilities under those standards are further described in the auditor's responsibility for the audit of the financial statement section of our report. We are independent of the group and the company in accordance with International Ethics Standard Board for Accountants, International Code of Ethics for Professional Accountants, including the International Independent Standard, the IESB Code, and we have fulfilled our other ethical responsibilities in accordance with the IESB Code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Key audit matters. Key audit matters are those matters that in our professional judgment were of most significant in our audit of the financial statements of the current period. These matters were addressed in the context of our audit of the financial statement as a whole, and in forming our opinion thereon, we do not provide a separate opinion on these matters. Expected credit loss says in relation to financial assets, the first key audit matters that you can see, notes 3F, 4B, subsection 5 and 5A to the financial statements for management's related policies and disclosures. The determination of expected credit losses, ECL, on the group's financial assets involves significant judgment and estimation uncertainty due to the application of the forward-looking impairment model required under IFRS 9. The ECL model requires management to assess the probability of default, loss given default, and the exposure at default for each financial asset, incorporating reasonable and supportable forward-looking macroeconomic information. The most significant impact of the ECL model relates to the group's investment securities and loans receivable. Given their size and sensitivity to changes in assumptions, as of the 30th September 2025, loans receivable measured at amortized costs amounted to 8.58 billion. Investment securities measured at fair value through other comprehensive income amounted to 96.8 billion. The net movement in the ECL allowances recognized in the profit or loss total 124 million. Based on the complexity of the ECL model and the use of the multiple data sources, the incorporation of a forward-looking macroeconomic scenarios, and the level of judgment involved in stated assessment, this area was considered to be a key audit matter. How our audit addressed the key audit matters. Understanding and evaluating controls over the ECL framework, including the model governance, data integrity, management review controls, and approval of key assumptions. Assessing the appropriateness of the ECL methodologies applied to the loans receivable and investment securities, including consistency with the requirement of IFRS 9. For investment securities, evaluating management use of the transitional probability of default, PD matrix-based on historical default rates by rating category, and assessing the determination of the loss given default, LGD, using historical recovery rates for the sovereign and corporate issuers. Testing the classification of the debt securities by credit rating and asset class, and evaluating the diversion of PDs from external credit rating agency, including Moody's, with adjustment for industry-specific and country-specific risks where relevant. For loans receivable, assessing management's approach to estimating PDs using publicly available data for comparative entities within the industry, including evaluation of adjustments made to the entity-specific risk factors, evaluating management staging assessment, including the criteria applied in identifying significant increases in credit risk and the appropriateness of stage 1 and stage 2 classifications. Assessing the forward-looking information incorporated into the ECL model by evaluating the macroeconomic variables used, the reasonableness of the scenarios and weighting applied, and consistency with external economic forecasts. Testing on a sample basis key data inputs used in the ECL calculations, including exposure at default, maturity dates, and credit ratings, by agreeing these to external source documentation and underlining contractual agreements. Reperforming the ECL calculation on a sample basis to assess the mathematical accuracy of the model, assessing the adequacy of disclosures in the financial statements relating to ECL, including sensitivities, key assumptions, and the reconciliation in credit loss allowances. Based on the procedures performed, we found the methodologies, assumptions, and data used by management in determining the expected credit losses on financial assets to be reasonable and consistent with the requirement of IFRS 9. The related disclosures in the financial statements were considered to be appropriate. The second key audit matters: valuation of unquoted equities classified as fair value through profit or loss and fair value through other comprehensive income. You can see notes 5E and 15 of the financial statement for disclosures of the related accounting policies, judgments, estimates, and balances. As of the 30th of September 2025, the group held unquoted equity investments, including investment securities classified as fair value through profit or loss and fair value through other comprehensive income, with a total carrying amount of $2.86 billion, representing 1.87% of the group's investment securities carried at fair value. These securities are classified as level 3 in the fair value hierarchy under IFRS 13 as one or more significant input used in their valuation are not based on observable market data. Management has determined the fair value of unquoted investments using several valuation techniques that relied on unobservable inputs, including the dividend discount model, the DDM. Future dividends are projected and discounted using observable market dividend yields, adjusted for risk premiums reflecting entity-specific and liquidity risk. Risk adjustment discount cash flows approach. Guaranteed payments are discounted using a weighted average cost of capital derived from observable risk-free rates and equity risk premium adjusted for entity-specific risk factors. The equity method capitalization of earnings. Expected earnings are capitalized using a cost of equity derived from observable risk-free rates, equity risk premium, and small companies premium. Significant judgment is applied by management in estimating future cash flows, selecting risk premium, and determining appropriate discount rates. How the matter was addressed in our audit. 1. We assess the appropriateness of the valuation techniques applied by management in accordance with IFRS 13. We test the key inputs used in the valuation, including projected dividends, expected earnings risk-free rates, equity risk premiums, small company size premiums, and liquidity adjustments. We recalculate the fair value used in the models applied by management to confirm the mathematical accuracy of the computations. We also evaluate the reasonableness of significant assumptions by comparing them with observable market data and other available benchmarks. We review the adequacy of disclosure in notes 5E and 15, including Level 3 classification, valuation method, significant judgment, and estimates applied. Based on the audit procedures performed, we concluded that the valuation methods, assumptions, and related disclosures for unquoted equity investments are reasonable and appropriately reflected in the financial statements. Responsibilities of management and those charged with governance for the financial statements. Management is responsible for the preparation of the financial statements that give a true and fair view in accordance with IFRS accounting standards and with the requirements of the Jamaican Companies Act. And for such internal control as management determines is necessary to enable the preparation of the financial statements that are free from material misstatement, whether due to fraud or error. In preparing the financial statements, management is responsible for assessing the group's and the company's ability to continue as a going concern, disclosing as applicable matters relating to going concern, and using the going concern basis of accounting unless management intends to liquidate the group and the company or to cease operation or has no realistic alternatively but to do so. Those charged with governance are responsible for overseeing the group's and the company's financial reporting process. Other information. Management is responsible for the other information. The other information comprises the information included in the annual report, but does not include the consolidated and standalone financial statement and or auditor's report thereon. The annual report is expected to be made available to us after the date of this auditor's report. Our opinion on the consolidated and standalone financial statement do not cover the other information, and we will not express any form of assurance conclusion thereon. In connection with the audit of the consolidated and standalone financial statement, our responsibility is to read the other information identified above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the consolidated and standalone financial statement or knowledge obtained in the audit or otherwise appears to be materially misstated. When we read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. Auditor's responsibility for the audit of the financial statements. Our objectives are to obtain reasonable assurance about whether the financial statement as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a level of assurance, but it's not a guarantee that an audit conducted in accordance with ISO will always detect a material misstatement when it exists. Misstatement can arise from fraud or error and are considered material if individually or in the aggregate they could reasonably be expected to influence the economic decisions of users taken on the basis of these financial statements. As part of an audit in accordance with ISO, we exercise professional judgment and maintain professional skepticism. As part of our audit in accordance with ISOs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risk of material misstatement of the financial statement, whether due to fraud or error, design and perform audit procedures responsible to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than for the one resulting from error, as fraud may involve collusion, forgery, intentional omission, misrepresentation, or the override of internal control. Obtain an understanding of the internal controls relevant to the audit in order to design the audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group and the company's internal control. Evaluate the appropriateness of the accounting policies used and the reasonableness of the accounting estimates and the related disclosures made by management. As part of an audit in accordance with ISOs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also conclude on the appropriateness of management use of the going concern basis of accounting, and based on the audit evidence obtained, whether a material uncertainty exists, relates to events or conditions that may cast significant doubt on the group and the company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosures in the financial statement, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future events or conditions may cause the group and the company to cease to continue as a going concern. Evaluate the overall presentation, structure, and content of the financial statement, including the disclosures, and whether the financial statement represents the underlying transactions and events in a manner that achieves fair presentation. Obtain sufficient appropriate audit evidence regarding the financial information of the entities or business activities within the group to express an opinion on the consolidated financial statement. We are responsible for the direction, the supervision, and the performance of the group audit, and we remain solely responsible for our audit opinion. We communicate with those charged with governance regarding, among other matters, the plan, scope, and timing of the audit and significant audit findings, including any significant deficiency in internal control that we identified during our audit. We also provide those charged with governance with a statement that we have complied with the relevant ethical requirements regarding independence, and to communicate to them all relationships and other matters that may reasonably be thought bear on our independence, and where applicable, the related safeguards. From the matters communicated with those charged with governance, we determined those matters that were of most significance in the audit of the financial statements of the current period and are therefore the key audit matters. We describe these matters in our auditor's report unless law or regulation precludes public disclosure about the matter, or when, in extremely rare circumstances, we determine that a matter should not be communicated in our report because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefit of such communication. Report on additional matters as required by the Jamaican Companies Act. We have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purpose of our audit. In our opinion, proper accounting records have been kept so far as appears from our examination of those records, and the financial statements, which are in agreement therewith, give the information required by the Jamaican Companies Act in the manner required. The engagement partner on the audit resulting in this independent auditor's report is Balvin Van Riel, BDO Chartered Accountants, the 2nd of February, 2026. Thank you very much.
Thank you. Thank you. Thank you, Mr. Van Riel. At the start of the meeting, I mentioned a number of significant developments that have strengthened our business and advanced our strategic ambitions. It is now time for you to hear more about those developments. I would like to introduce Mr. Richardo Williams, who will provide an update on Barita Fund Managers Limited, Mr. Dane Broadber, who will provide an update on the financial group, Mr. Stefano D'Ambrosio, who will provide an update on the group's fintech initiatives, Mr. Bernard Stocker, who will provide an update on Barita's real estate strategy, and Mrs. Tankita Chance Wilson, who will provide an update on the foundation. Having introduced each of our speakers, I invite you to note the order of presentations. Each speaker will follow directly after the preceding presenter, without further introduction, ensuring a seamless progression through today's agenda. I'd also like to encourage our presenters that we're running a little behind schedule, so let's make it short and sweet. So, Richardo?
Thank you, Chairman. Good morning, shareholders, colleagues, friends. I greet you well. I'll just get right into it. My objective today really centers on three primary things. One is to give you a report on the integration thus far between Barita Fund Managers Limited, formerly JNFM, just to reiterate the strategic significance of the acquisition and to signpost some of the early value creation that we have started to unlock from the acquisition. I'll just want to take a quick second to locate the acquisition in a broader context. The chairman mentioned in his opening remarks the almost existential crisis we faced last year when Hurricane Melissa passed by us and over us. And had it gone through the entire island, I'm not sure what is the nature of the conversation we will be having today. The infrastructure, I'm sure, would have been devastated. And that brings into large focus the nature of the financing gap that exists, not just in Jamaica, but across the Caribbean, in terms of the critical infrastructure that needs to be financed to ensure that we are a resilient society. So in that vein, I want to present to your minds the nature of the business that we are in. It is not only about generating the profits, as critical as those are, but to ensure that we are united in this resilient society to ensure that we have a viable future going forward. What then is the purpose of our platform? On screen here are the nature of the type of intermediation that the financial and capital markets are currently doing in the region. The first looks at the JC market cap relative to our GDP. It's currently at about 61.7% relative to 2024 nominal GDP. If we look at developed nations such as the US, the ratio there is over 125%. What it suggests is that there is a significant opportunities for us to begin to use the capital markets to fund some of the financing gaps that currently exist. When we look at combined institutional assets, we're currently at 56%, and the 56% there represents what the pension funds, insurance companies, and collective investment schemes are doing. When we look at better comparables such as Australia, New Zealand, Canada, these are known jurisdictions that are using large pools of capital, such as pension funds, to fund their national development. We are some ways off, right, from these numbers. And this is after we have grown, because if we were to look at these numbers from 2000, the numbers would have been even lower. I want to locate the nature of the work that we're doing against this backdrop. So there is a purpose there, but there's also a significant profit potential. What is the implication for BFM then, and what really drives our daily work? The institutional capital is becoming an increasingly important owner and allocator of Jamaica's productive assets, right? As Jamaica's financial system evolves from primarily bank intermediation toward institutional capital intermediation, the opportunity for BFM extends well beyond traditional mutual funds, collective investment schemes, and just our pension funds. We are going to be significant players in orchestrating the next leg of Jamaica's infrastructure development by leveraging the capabilities of the capital markets, by pooling these pools of capital. So BFM is being positioned as a platform that originates structures and manages the productive assets, shaping Jamaica's next phase of economic development. So having said that, let us just reprise briefly the background and context for the acquisition. So we took over, at least operational control, on the 19th of January, and we have now rebranded to Barita Fund Managers Limited. That is an important goal for us. The asset broadens Barita's overall asset management footprint across Jamaica and increasingly the wider Caribbean. And the acquisition also advances the Cornerstone Group's long-term strategy to strengthen our investment management capabilities, broaden our product offerings, and also enhance our long-term value proposition to our clients. Having said that, what then are our current integration priorities? One is that we are currently integrating BFM into Barita's entire enterprise-wide infrastructure. So Group CEO, well, Bill, CEO Raman indicated earlier the governance and risk management capabilities that we have invested in. All of those are being leveraged to bolster the BFM platform. So that work is currently ongoing. Obviously, this is to ensure that we can diversify the recurring fee within the overarching group. Again, that is something Stephen and Raman alluded to in their respective presentations. Barita's established risk governance and risk frameworks are being extended to complement what already exists in BFM. Our immediate focus, therefore, beyond just the bolstering the risk and governance elements of the platform, is to ensure service continuity. And that has been a day one mission for us. From the day we took over, we indicated that there should be no disruption to clients. Operational stability is paramount for us. And we have been executing, I would say, with aplomb where those things are concerned. Positive engagement with clients, employees, and our counterparties are also critical for us, and we have been executing well there. So that rounds out the primary integration priorities for us in the short to medium term. Again, what is the strategic significance of the acquisition? The quality of earnings, critical, right? When we look at our the composition of our net operating revenue, by nature and design, the business is tilted towards interest rate cycle and the larger business cycle. What we really want to do is to design the business such that when those undulations take place within and across the various business cycles, you don't see those cyclical variations coming through in our earnings. That is really what we mean by quality of earnings. And the best way to ensure against that is to ensure that we have a significant base that is recurring, repeatable, and programmed. And that is going to be a central way in which BFM contributes to the group. The platform and the distribution is another critical element, right? Our intention is to build this platform to go beyond just pensions, just to go beyond collective investment schemes. Again, it's really about anchoring a platform that can collate capital towards funding some of our critical imperatives, primarily across infrastructure and other needs that confront the society, as I mentioned earlier at the top. What are some of the strategic wins we have gotten under our belts so far? As I mentioned just now, we have successfully changed the name. And having changed the name, I'm pleased to say that all of our regulatory obligations in terms of the various licenses to ensure that we are continuing to operate with strict fidelity, all of those have been accomplished. So those are some important and critical wins where those are concerned. In terms of our client retention, employee retention, we're also acquitting well there. So those are some important wins for us. In terms of the contribution, and this is critical for you as shareholders, because the acquisition of BFM represents a deployment of capital from Bill, the parent, is, you as a shareholder, as a vested interest there. For the stub period from January 19th to the end of our quarter in March, the platform contributed just about 55 million in profit after tax on net operating or operating income of just over 180 million. And so, you can extrapolate to see what that could look like by the end of our financial year, given this kind of run rate. So the acquisition helped the Bill Group, very importantly, for us to cross an important threshold of over 500 billion in combined assets under management. And this is no mean feat. It's a significant accomplishment for the group. And there I'm just showing again, those numbers that I mentioned just now, need not be detained there. What are the priorities for myself and the business over the next 18 to 24 months? Very importantly is maintain the continued stability of the enterprise. It's a high fidelity operation that we're running for all of our various stakeholders, employees or clients, regulators, etc. We also will be completing and finalizing the target operating model, consistent again with what I've telegraphed in terms of our ultimate ambition. We are at the tail end of this. It should be, I would say, finalized and approved by the board shortly. And again, the target operating model here is really outlining what that desired end state will look like and what are the intermediate steps that will be taken to achieve that objective. The pensions and unitized growth, clearly those are critical capabilities that we have immediately acquired, particularly on the pension side of things. We have mentioned on a number of occasions that prior to now we did not have, that is within bill, a strong presence within pensions management. Now we have that, and we are now going to amplify this element of the business immediately by bringing on various capabilities, human, tech, and otherwise, to really scale this element of the business. And the final element, again, really is about regional innovation. We need to lay the foundation for further asset management innovation across Jamaica and the region. The IDB, in its latest publications, mentioned that the financing infrastructure gap within the region is at about US 21 billion. That is what needs to be spent between now and 2030. That represents about 15% of the regional GDP. That is a big number, and it also represents the scale of the opportunity that we are preparing to take advantage of. With that, shareholders, that ends my presentation.
Thank you.
All right, thanks, Richardo. So I will talk about the context in which Barita and BFM operate within the Barita Financial Group. Now, the chairman in his introduction would have already set the stage for much of what I'm going to talk about. But I'll talk a little bit more about the implications, where the group is heading, and more importantly, what that means for you as shareholders. So we'll start with the structure of the group. So the point to emphasize here, it's a shared standard across 4 complementary businesses. So we have Barita Investments in investment management, Barita Merchant Bank, Barita Fund Managers, and Barita Unit Trust businesses, all aligned around balance sheet strength, customer centricity, efficiency, and governance. Now, the group is characterized by strong capitalization. Barita shareholders' equity is roughly 36.4 billion, capital adequacy around above 24%, more than double the regulatory minimum, and close to a quarter of all of the securities dealer capital in the market. Now, sitting within this group is also Barita Merchant Bank with a capital adequacy of 65%, the highest among DTIs. So we have a group that's built for resilience under stress, but also provides a springboard for growth. Now, this is real depth to build on, right? So Richard spoke about the pension and asset management capabilities. We're bringing that, the systems and platforms from which for it to scale, and the digital formation in the merchant bank, really feeding the transformation in Barita Investments. Seamless access for customers across the group to the full suite of BFGL services. Now, for shareholders, what that means is a more diversified and resilient earnings base. 4 engines aligned around the same goal, as opposed to 4 businesses operating in parallel. And that gives us the capacity to keep investing for growth. Now, as a licensed financial holding company, this is really where capitalization and risk management meet oversight and assurance. Now, the last AGM would have announced the reorganization under Barita Financial Group. Since March, that group has been licensed as Jamaica's 8th licensed financial holding company under the consolidated supervisory framework of the Bank of Jamaica. Now, in practice, what that means is group level standards for governance, capital, and risk. The consolidated group, which includes Barita Investments, now sits under BOJ supervision. Now, there's also a separate independent board overseeing risks, strategy, and capital allocation, distinct from the operating boards of Barita Investments, the Merchant Bank, Barita Fund Management, and the Unit Trust Company, giving another layer of oversight for the group strategy. Now, the forward implication is that this consolidated supervision now raises the standard of accountability for the group and its subsidiaries. And importantly, it legitimizes the platform for executing our one group strategy, letting us run integrated cross-entity initiatives with full supervisory alignment and improve the efficiency and customer experience. That's really the difference between a collection of companies and a true financial group. And for shareholders, it means stronger governance and disciplined capital allocation. Now, we've also aligned the group under a single Barita identity. Cornerstone Trust and Merchant Bank is now Barita Merchant Bank. Bank of Jamaica would have approved the name change on the 8th of April, and following the acquisition of JN Fund Managers, that business now carries the Barita Fund Managers name, as Richard would have mentioned. Now, what that signals is a common standard of financial services across the group, and it really reinforces the promise of a broader suite of offerings under one coherent brand. Now, looking ahead, what one trusted name really means is that it lowers the cost of building trust, strengthens distribution, and sets the stage for deeper integration. Now, core to the strategy of our group is what we call this one group model, right? And it rests on two interlocking pillars. On customer centricity, the idea is simple. With investment management, merchant banking, payments, fund managers, and collective investment schemes all in one group, a client should be able to reach all of that through a single unified relationship as much as possible, with experience standards tailored to each segment around expertise, accessibility, trust, and responsible evolution. Now, core to this is developing our digital channels and ensuring the right products reach each customer segment through the most optimal channel. On operational efficiency, we're consolidating best practices, we're removing duplication, and using technology-enabled automation to lift productivity at both the institutional and team level. Now, the aim here is an operating model that can subsume any future additions to the group and make it resemble as closely as possible a single institution with a broad and growing range of products, services, and channels, extended further by the partnerships that we would have cultivated throughout the ecosystem. So these goals aren't really in tension, right? When operating model is right, client experience improves and the cost structure falls at the same time. So for shareholders, that compounding effect is the engine of margin and sustainable growth. Now, the innovation story, one leg of the innovation story is Barita Merchant Bank, really being purpose-built as a digital-first platform. Born digital, not a legacy platform with an app bolted on, but designed to really widen access, modernize payments, and reach new customer segments. Now, we've been working on this in the background for a while, which is why you haven't really heard about us or this app much. But Brick by Barita is really the first step for a mobile banking platform. Now, Barita Merchant Bank's wallet received the Bank of Jamaica's non-objection to launch and is really anchored in financial inclusion. So customers onboard fully in minutes. In fact, a more reasonable measure here would be seconds, and are issued a Visa virtual prepaid card instantly, so they can transact anywhere Visa is accepted from day one, rather than waiting on a merchant network. Person-to-person transfers between wallet holders are free and will build out the merchant ecosystem over time to lower everyday transaction costs further. Now, we're going to shortly begin a controlled pilot before our full-scale launch. Now note, this is only the introductory product. Over time, that channel is going to evolve to include the retail services of Barita Merchant Bank and eventually those of Barita Investments, such that the bank and eventually the financial group is effectively your phone. Now, it's extended further by the ecosystem partnerships that we have developed that will expand distribution and reach across the region. So the forward story is reach and optimality. A digital-first platform brings new segments into the formal system and builds a broader customer base. For shareholders, this is a scalable growth engine for the years ahead, pursued deliberately in phases and with full regulatory alignment. Right, so this slide really deliberately draws on all the milestones that we have spoken about for the year. The financial holding company license, Barita Merchant Bank rebrand or digital bank, and the Barita Fund Managers acquisition, anchored by partnerships within the group and at the parent level. So in short, we'd have reorganized and Barita Financial Group is now a licensed financial holding company with stronger oversight and regulatory legitimacy. We acquired Jane Fund Managers to build an asset management platform for scale. We unified the group under the Barita brand, renaming Jane Fund Managers to Barita Fund Managers and Cornerstone Trusted Merchant Bank to Barita Merchant Bank. And we're on the cusp of launching our digital bank, having received non-objection for its introductory mobile product. So, individually, these are initiatives, but collectively, they describe a materially larger and more integrated platform with a single regulated architecture binding all of it. And this is complemented by the distribution and regional reach of the partnerships that would have been cultivated to complement this, both internally and by Cornerstone, all while we execute our core strategy to integrate and optimize the group. The implication here for shareholders is scale and resilience, considerably more assets and invested capital under management, broader and more durable fee-based income, and a group better positioned for the next phase of growth. So what does all this mean for you, our Barita investment shareholders? The one group model becomes explicit in 5 concrete benefits. First, a broader suite of services for your clients, and with it, deeper and more meaningful relationships. Second, greater efficiency as duplication between Barita Investments and the group is removed. Processes are automated through technology, and practices converge on the best way of working. And third, through the breadth of services, functions, and geographical reach and opportunities, they build lasting impact, and the group now becomes more attractive to the best talent in the industry. Fourth, new growth, anchored by the strength of capital across the group. Now, these capabilities and client relationships create the risk capacity and now the practical execution capacity for the meaningful growth that we're looking for. And fifth, a safer institution through regulatory and board oversight, augmented by consistent investment in risk management. Now, our growth specifically comes from 3 reinforcing sources: cross-sell of a wider product set, the expanding digital footprint through BRIC and the merchant bank, and partnerships and regional reach that we've developed through our ecosystem. These benefits compound over time, and together they support more resilient earnings and stronger long-term returns. So, as I close, I'll talk again about the 3 competencies that define us as a group: innovation, customer centricity, and risk management and capacity. I'm going to take these in reverse order. First, it's looking at the investments that we've made in risk management and, treating our above average capital and operational resilience, not necessarily just as a source of resilience, but also a springboard for growth. It's organizing around our customer to listen carefully and respond with the full depth of our expertise. And it's organizing the group to deliver continuous innovation and improvement and meet clients where they're going. For shareholders, that is the commitment behind One Group, a business built to compound value responsibly and to keep doing so well beyond this year. So while I'm on the note of innovation, I'm going to invite our Chief Innovation Officer, Stefano D'Ambrosio, to talk a little bit more about all the other elements of innovation within our group.
Thank you, Dane. Good afternoon, shareholders. So my name is Stefano D'Ambrosio. I lead innovation for the group. I kind of want to guide you a little bit through what that means and how we're using innovation as a means to build an engine that compounds value for Barita. Effectively, what this means is that we are sitting at the intersection of our business strategy and the engineering functions. So digital product, engineering, quality assurance, and bringing all of these together in order to get commercial results. I want to take a few minutes to guide you through how we're doing that by using our platform, our people, and our intelligence. This is structured around three primary assets. The platform. We've heard a little bit about Brick by Barita already. But everything that we do in the innovation unit ultimately ladders up to three simple things. We believe that smarter technology, smarter teams, and smarter interactions are the key to growing efficiency, improving our customer experience, getting better revenue, and most importantly, expanding market access. Through the platform, we have brought together one experience for banking, investments, and payments. The people are the key behind making all of this happen. We've made the choice to deliberately build an in-house team that is helping us to build not only what we're showing today, but what is going to be coming for tomorrow. Additionally, we believe that the talent always needs to be renewed, and as such, we have a pipeline to continue evolution from that point of view. And lastly, intelligence. This is where AI comes in and helps us ensure that we have a correct approach to using AI to build the right tools and to bring the right products to market. I'll start by speaking a little bit more about Brick by Barita. As Dane indicated, it is a digital platform that we have built that is set to be the entry point into all of the full capabilities for the group. We envision the ability to have payments, banking, and investments located in one place in the palm of your hand. Now, in order to achieve this, we've followed a very deliberate path by building the product step by step. The first portion was to ensure that we could obtain our regulatory approval to launch the first iteration of the solution, which at this point has been completed, and the Bank of Jamaica has given that non-objection for us to proceed. The second part is to launch this in a very deliberate pilot that is allowing us to control, test, and strengthen as we continue to move forward. We want to make sure that we're building the solution not only from what has been delivered from our perspective and the research that we've done up to this point, but hand in hand with the customers and the feedback that we're going to obtain. The solution is built taking into consideration many feedback mechanisms and cycles so that we can bring in the knowledge that we obtain as we get further usage. And last but not least, the roadmap itself is built out to deliver augmented functionality over time. So what you're seeing at this point is very much just the introductory phase and what we are going to put to market very soon, but we have the vision to expand that significantly. So what does this mean for the starting phase? As Dane indicated, we are starting by the capabilities aimed at widening access and allowing everybody to be in the financial services ecosystem. So how do we do that? When we did the original research, we found that a lot of the individuals that wanted to be a part of the financial ecosystem didn't have the ability to do so based on location, the ability to provide KYC, or just the time to spend at a branch. So we put a lot of focus on building an experience around digital account onboarding, where creating an account is as simple as scanning an ID, taking a selfie, and being admitted into the platform with the regulatory KYC requirements taken care of. At this point in time, a customer would be able to onboard, and we've seen this run from minutes to, in some cases, under a minute in order to be admitted into the platform. Once admitted into the platform, we're issuing a Visa companion card. This is a card that is issued digitally instantly, meaning anybody can transact online the second that they onboard, but it is also tied to a physical card for those who prefer to transact with physical medium. So you would be able to use this card at any point of sale where Visa is accepted. It would be accepted at any ATM, effectively bridging the gap between the digital bank and the physical medium as well. One of the things that came up very often when we were doing our original research and speaking to the users and the customers for these types of solutions is that they were moving funds across with a lot of challenge. So moving money from Kingston to Portland or to other locations involves significant effort, which is why we built the ability to do transactions, sending and receiving peer-to-peer funds completely free of cost and instantly. So the value is delivered real time. And one of the key things that everybody mentioned was trust, right? So we wanted to make sure that we allow our customers to see in real time, not only what they have done, but where they're going. So they have access to their balance, their activity. They can establish controls, decide when cards can be used, when they're supposed to be temporarily frozen or blocked, have access to their customer service representatives, or reach out to us in any way. Ultimately, the objective is to bridge the customer experience between the humans behind what has been built, but leveraging technology to the largest extent possible. Now, I've spoken a lot about the banking capabilities, but for Barita, we've been known much longer for our investment capabilities. So one of the key things that we've built is a roadmap that speaks to both the omni-channel capabilities, meaning being able to interact from anywhere, while also keeping investment at the core of what we are doing. We are building this platform, carrying forward our investment heritage, and ensuring that everything that you have known Barita for over the years continues to carry over into the palm of your hand. So we envision that over the next releases, we're not only going to be providing the banking capabilities that I've spoken to and additional retail banking capabilities, but also the ability to view your investments directly on your device. The second part that I want to talk to is our team. And we made the very deliberate choice when we started this a few years back to build the team directly in Jamaica. We found when we were doing our initial interviews and scouting talent that the people that build the best solutions are the ones that deeply understand the problems that they are trying to solve. There is no replacement for being able to touch and feel what you are doing and who you are building it for. It was very quickly that we were able to build a team and bring that team together. And behind the scenes, we've been working on this for a few years in order to build the solution that we're going to be deploying to market. A lot of what has been done is also the fundamental building blocks to be able to expand to further solutions in the future. So some of the things that happen behind the scenes that are not as visible as the application itself, but allow us to do this in a safe way. So we have in place solutions and measures that look at anti-money laundering, KYC, fraud prevention, all designed and built by the team that is in-house. In addition, it's always important to look not only at what we're doing now, but how the market is changing and what is going to be relevant in 1, 2, maybe 5 or 10 years. And the future builders are part of our analyst rotation program and our AI lab that allow us to make sure that we continue to gather fresh perspectives of what is to be taken into consideration for how we build things. And with that, I want to speak a little bit about just a tiny bit. I won't reveal too much of what we're doing on the AI front just yet, but I just want to speak to how we're approaching it. Right? So one of the things that we've observed in the market is that AI is very clearly where we are going towards in the future. And it's something that I also have a 100% agreement with, that it is something that is not only going to be relevant soon, but is already giving us significant returns on what we are building. Now, very importantly, we've observed market-wise that the ROI of these initiatives has been very mixed. And that doesn't mean necessarily that AI is good or bad. It is about how it is being approached and with what purpose it is being built. If AI is done simply for the sake of AI, it doesn't necessarily bring too many returns. But when it is done in a disciplined way, finding specific pain points and using it as a tool where we understand where it can bring significant value, that is where we observe the results the best. So the way that we are approaching this is by having the rotation program in our AI lab, find those pain points across the different teams. These can be internal needs or they can be customer-facing needs, building pilots. And pilots give us the ability to test with real situations, not just theory, right? So they bridge the gap between the paper and the actual results that we expect to see. This allows us to demonstrate when things work. So some things that go through the lab make it out and it become real products. Some things don't, as with every possible experiment. But by following this deliberate mechanism, we can confidently take things once they've gotten to a point where we know that they're going to be meaningful and impactful and scale them. Now, I'm providing two very simple examples of some of the things that we're exploring. And I just want to be clear at this point in time, these are not announcements directly of features, but just to give you an idea of some of the initiatives that we're looking at. Now, there's a lot more that we'll reveal in due time, but for now, I wanted to leave you at least with these two. As I had mentioned before, we're looking at, one, expanding the markets that we can possibly cover, and the second is deepening the relationships that we have with our customer base. So lending to the overlooked is something that is particularly important to us, given the angle of inclusion with which we have built Brick by Barita. We've observed that over the years, traditional credit models have left certain people out of the financial ecosystem. That should not be the case. So by building AI models that let us look at other factors that are not necessarily what has been looked at in legacy, it allows us to more clearly understand where we can extend credit reasonably, safely, and at better rates for both the consumers and the organization. Another example that we're exploring from the perspective of inclusion and accessibility is conversational banking. So picture being able to say, hey, Stefano, send $5,000 to X person, right? Behind the scenes, the AI would be able to determine, is this the person that you're looking for, yes or no, and execute the transaction. As I mentioned, when we're doing our original research, a lot of what we came across was challenges just in using technology. So we've made an effort to make this as simple as possible so that absolutely everybody can have access to the things that we are doing. Ultimately, we want to continue to build in the same way. We prove the value of what we're doing within the lab, and once it has been demonstrated that it can work, then we can extend it to other directions. Now, I've spoken a lot about the AI lab and some of the talent that is behind the scenes. I wanted to make sure that we allowed an opportunity for two of the AI champions that are with us to provide a little bit of their perspective. So I'll invite Justin Clark and John Tejasaya to provide us with a few of their observations on the AI front.
Good morning, everyone. It is an honor to be here at this annual general meeting, and I don't take this lightly. I take this as an opportunity, not just to show that Barita's investment in my education, but investment in young people at large. For me, this is a testament, not just in my education, but a testament to Barita's belief that the future of finance, technology, and innovation and national development will be guided by our young people. My name is Justin Clark, and I'm a computer scientist from the countryside of Portland, Jamaica. And I've graduated from Columbia University with a bachelor's in computer science. And I'm currently in the process of pursuing a master's of science at Stanford University in artificial intelligence. I'm a Rhodes Scholarship finalist and a distinguished Columbia Scholar who for the past 2-3 years have been deeply involved in artificial intelligence research, where I've been looking at how AI models can enhance environmental engineering and urban planning. So at Barita, I use AI, artificial intelligence and machine learning models to help enhance processes, make better decisions, and enhance the next stage of innovation at Barita. This is technology, not just for technology's sake. This is technology for smarter systems, better decisions, and a Barita in the pursuit of intelligence, agility, and ambition. What I represent here is more than just AI. What I represent is Barita's decision to support young people to thrive and grow. And because we are trained globally, we are sharpened by global institutions, and we have the intelligence and agility to start strengthening Jamaican economies, Caribbean economies, and start forming relationships with the institutions that formed us. On that note, I want to show my deep gratitude to Barita, to Mr. Ferguson, and especially to Mr. Paul Simpson, CD, who have seen opportunity and in the potential in me and chosen to support it. This opportunity I will take with a stamp of responsibility. I will dedicate excellence, consistency, discipline, and ambition to contribute meaningful efforts to the Barita company. In the future, I envision Barita will be shaped by bold leadership, intelligent decisions and systems, as well as trusted relationships. And I'm excited to play a part in this future. Thank you.
Good morning, everyone. Oh, good afternoon, sorry. My name is Ajante Josiah, and similar to Justin, I study at Columbia University. I'm going into my senior and final year, where I study data analytics and applied math. Practically, what that means is I focus on deep learning, machine learning, AI, modeling of mathematical systems, and financial engineering, just to throw that in there as well. So at Barita, one of my personal goals has always been to take theory and to use that theory and to give it life in practical applications. And that is exactly what I'm doing in my work at Barita. At Barita, I'm working on combining analytics, machine learning, and AI to create novel applications that drive efficiency and improve our operational speed. And working at Barita, one of the things I've noticed is the youthful and collaborative environment in which we work. And I believe that's one of the main things that has promoted our speed in execution. And honestly, it's one of my favorite parts about working here. So looking forward to the future, I believe that the work I'm doing at Barita will not just contribute to the improvement of the current financial systems, but the advancement and innovation in future financial systems, whether that be things like quantitative finance or things of that nature. And I'm looking forward to playing a part in that future growth. Similarly to Justin, I also want to thank Paul Simpson for the opportunity that he has given me, but also the entire Barita team for the support that they have given me so far. And again, looking forward to the future. I believe that the future of Barita will be shaped by boldness, the boldness to innovate, and the boldness to try things that no one else is willing to try. Thank you.
Justin, Ajante, thank you so very much for taking the time to provide your perspectives. So I want to wrap everything up here before I hand over to Bernard, but just speaking a little bit to what all of this together means, right? So we've spoken about technology from the perspective of three different things, right? AI, people, code, however you want to name it, basically coming together, right? Now, if you look at any one of those parts in isolation, they provide a meaningful and valuable element, but it is one of those situations where the combination of the three and allowing it to run in cycles where we iteratively improve our platforms is where the compounding effect of the work that we do is coming through for Barita. We think that with these efforts and what we've built so far, we have built the capability and the foundational blocks to continue to iterate. And we hope that over the next few years, you're going to see many new features come out, not only what we've spoken of today, but quite a few things that we're building still behind the scenes that will be revealed in due time. We're building the future of money. We're building it right here, and we're delivering it to you. Thank you very much.
Good afternoon, everyone. Chairman, directors, valued shareholders, I'm very happy to be out here to talk about the new business vertical within the Cornerstone Barita Group, and that is the real estate vertical. You have seen and you have heard that Cornerstone Barita is a very dynamic organization with a focus on innovation and reinventing services and ideas in the space of banking. So where can we take this now with real estate? And let me allow me to introduce myself quickly. My name is Bernard Stocker. I'm leading the real estate vertical within the group. I joined the company around 9 months ago, and I bring a really interesting global perspective to this opportunity here in Jamaica. As you might know, we have a development pipeline here for real estate that manages around 2,000 acres of land. So with that perspective, I was really honored to join the company and bring ideas and strategies to the table that I've seen being implemented or discussed in other leading global sectors. So what I'm bringing to the table here from an experience point of view is I just joined Cornerstone coming out of Saudi Arabia. Basically, I worked for the Vision 2030 for His Royal Highness MBS, a really interesting initiative to kind of convert Saudi Arabia into a completely new country. And before that, I was for 20 years in New York and have worked for companies like Related Companies, one of the leading real estate developers in the US, RAL companies, and some architecture firms like ODA, SOM, and others. So I'm by training an architect, and I'm taking this approach of detail focus, diligence, and design appreciation into the development field. It's a really interesting challenge, and I think I have a very clear mandate here at Cornerstone, which is to convert the strategic land bank that was acquired over the last couple of years into tangible, professionally de-risked development value for Barita shareholders. Some of the previous projects, to give you a little bit of an idea of what I've been involved in, is like in Saudi Arabia, the Gulf of Aqaba, we developed 14 major tourist destinations. Some of them were communities with thousands of residents and all levels of amenities that you can imagine, from shopping to retail to marinas. We also designed and developed some really iconic buildings along that stretch of the coast. And some of the work that I did in New York was high-rise buildings, high-end condo developments here with Related Companies. And in the Caribbean, one of my projects that is currently going up here in Grand Cayman is the Mandarin Oriental Hotel. So what does this mean now for us? What do we want to do? So I think starting out, establishing a new vertical within a group is always a huge challenge. And one of the first steps or moments that we have to take is really to understand how do we want to approach that? What are our core values? What is the foundation of every decision, partnership, and project that we undertake? And I want to guide you and lead you to some of these ideas that I wanted to establish here that are our leading values as we are approaching and executing on our real estate developments. Certainly it's integrity. We always want to do the right things. There's simply no question it has to be in alignment with the values of the organization that we represent, and that is always the right way to do it, the right things. Excellence. Excellence is something that is very close to my heart, because excellence creates successful outcomes. There's no doubt about that. So everything that we are pursuing in this space, we are trying to deliver with the highest standards in mind, and that starts out in the design process, in the construction process, and then also how we're gonna run, manage, and deliver our assets. Innovation, we have talked about here earlier. Innovation is a hugely interesting driver and motivation also in our space, in hospitality, in development, in residential design. So what we want to do is we really want to think differently, outside of the box. We want to bring ideas to the table and want to execute faster, smarter, and better. Partnerships. We can only succeed together. So the process of real estate development is a process that includes hundreds of professionals from all different kind of sectors and places. But one thing is clear: the only way to succeed, to deliver successful projects is when we do this together. And I'm approaching every project as a collective effort with partners and stakeholders to make sure we can combine the kind of global expertise with local knowledge and deliver the best outcomes. Sustainability here, certainly in this region, is extremely important and will be a focus of our development. Sustainability taking all the way to resilience. I mean, we are in a very weather and climate exposed place here in the Caribbean. So resilience, not only from a design point of view, but also from an execution point of view, and just a way of thinking will be one of our guiding principles in delivering our assets. So what's our mission? The mission for our shareholders, for who this meeting is all about today, is really to create lasting value. For our shareholders, for the communities, and for Jamaica in large, by transforming these exceptional land holdings into high quality real estate destinations that will be defined by design excellence, disciplined execution, sustainability, resilience, and still an authentic Jamaican feel and character. Some of these mission drivers that we have is, as I've mentioned, is really creating investor values, and the investor value creation really happens through delivering strong risk-adjusted returns and institutional grade assets through a very disciplined and structured and transparent execution. And that institutional discipline and transparency that we're carrying over from the banking side is something that we will introduce into our real estate approach. One of these mission pillars is global standards and local soul. So we have the opportunity to bring some of the leading global minds to the table, and but we will certainly not forget what it means to deliver projects here in Jamaica with its rich culture and history. One of the missions is to really structure 2,000 acres of development into a sustainable phased growth execution plan. So we have to be very responsible. We have to be really delivering future-ready developments that are set up to deliver long-term performance. What's incredibly important for us, and this is certainly some of the values of the entire organization, is community. So we cannot deliver our projects and we cannot bring our services to a broader audience without including community and without the focus on really making sure that we are connecting the communities, culture and environment into one cohesive experience. And one differentiator that we will be focusing on is really to deliver best in class. I think there's a lot of space in this entire region to level up, and our focus will certainly be to deliver best in class assets in architecture, but also in the experiences that we will be designing to. How can we unlock value at this early stage of the development process? That's always a really interesting question that I'm being asked. So this is a very strategic approach. Real estate development does not happen overnight. This is a process that stretches out over years. But the way to unlock value early on in the process is really to have a very strategic site positioning strategy and thinking in place. What is the highest and best use for each of the properties? Once we have that understood, and that will be confirmed by our business studies and also outside consultants, we really will develop a entitlement strategy and delivery strategy that really lays out the path and process on how to deliver these projects, including all the understanding how to engage with the authorities and what are the regulatory requirements that we have to follow. One of the third really important points in how to unlock value and create value from an early stage on is who are the brands that we are bringing to the table and who are the design professionals that we are bringing to the table. So internationally acclaimed and established leading minds in that space will help us to really define that development strategy and thinking to make sure that we position our projects in a really truly best-in-class fashion. What are some of the risks that we are encountering and how can we eliminate these in this early stage? So there's a lot of work going into the kind of technical pre-development thinking and understanding of sites. Every real estate development, any kind of construction process always comes with risks. And the earlier and the better we understand those risks, the better it is for us and will lead us to a path of success. So in this early stage of development, we are looking at surveys, we're doing geotech investigations, we're doing coastal studies and climate studies to really understand what's the risk profile now for us developing some of these assets at certain locations. At the same time, in order to bring value to the table early on in this process, we are talking to capital partners and other lenders and potential co-investors to really understand what the whole opportunity of that development process could look like. And then in order to reduce risk, we have a land bank of 2,000 acres. We have to be very smart and diligent on how we face the delivery of our product, that it's absorbed in the market at the rate that we think that the market is available. I think the interesting thing about that is anything we're discussing now is years ahead in regards to the delivery date, right? So we have to be really thinking about, and we have to envision the future. How is it going to be in 5 years when we are bringing our projects to the table? What is the perception now, and what is the main drivers in hospitality, tourism, and global travel? A very interesting thought process, but that deliberate phased execution thinking is one of the critical components. How do we maximize now value for the shareholders? I think that's one of the most important questions we want to answer. So the increased focus now on getting things right, bringing projects out of the ground and building them, really opens up the opportunity for increased development profits that we are being set up here. So every project phase will convert land now into development value that we can then realize through further lease, sale, or operations. Some of these projects, some of these assets will certainly allow us to create rental income. And once the projects are being stabilized basically in their business environment, we will try to really create a constant flow of income through rental. There's an opportunity now for asset management income once we have these assets established. And some of the future asset value appreciation really happens by us working through this process already very structured and diligently, working through design, planning, getting the approvals, getting the right partners to the table. It's an enormous opportunity for us to broaden the horizon here in regards to who we want to bring to the table and who do we engage with in presenting this opportunity. So we are very focused on bringing foreign direct investments here to the island, and to a significant amount given the size of our land bank. And with our approach, best in class, and trying and looking at innovation, at new products in our sectors, there's certainly going to be a positioning uplift for the market in Jamaica, bringing world-class projects to the table and creating that uplift for business, travel, and the investment environment. Why Jamaica? It's also an interesting question. I mean, the beauty of the island, everyone knows. The picture that you can see here actually is a picture of one of our sites at Raggy Beach. Our land bank is holding truly unique properties, but the opportunity that we have here in this market, where Jamaica does not need an introduction globally as a brand. I think that is established. I've traveled around the world, and I know that Jamaica does not need an introduction. We are certainly one of the best connected islands here in the Caribbean, now with airlifts into North America and the European markets. We have large land parcels available for development. We're in a good position compared to other Caribbean islands. And there's an opportunity for innovation to elevate hospitality and branded residential, combined with wellness, health, and other future trends that are very successful in global travels. Jamaica is a good place to attract foreign direct investment. There's a huge diaspora that is following and coming back basically to Jamaica. And with whatever we are doing, we're also very closely aligned here with the national economic development and tourism objectives. So the positioning is clear for us. All the raw ingredients are there. Now we just have to understand, we will bring this together into a really truly unique opportunity here now for developing assets on our properties. What's a development roadmap? So in total, we have 7 properties that we currently hold, and we have to phase them to be really smart on how we deliver these. So there's an immediate focus now on delivering projects here in Kingston. For example, one of the smallest sites that we have is actually an industrial site at Ferry Pen. And then other sites here in Kingston are Harbour Street and Lady Musgrave. So there's a focus on developing now the Kingston projects and getting the process underway. And that's an immediate step that we want to undertake in this pipeline. Then we have split other near and long-term development goals out here for the other sites. You know, some of the sites are fairly large, from 100 acres to 300 acres to 1,600 acres. So we'll be very smart on how we are developing and facing these developments. So now this is the stars of the show. I just wanted to show you a couple of pictures of the sites that you understand what I'm talking about here. So one of the closest ones nearby is 39 Lady Musgrave and Argyle Road. There's actually 2 lots combined into one. It's around a 2-acre site. It's fairly across from the AC Hotel and directly across from the Mystic Thai in this golden triangle area of Uptown. A beautiful site directly here on Lady Musgrave, and our development strategy for there is a positioning with cornerstone headquarters, including then hotel and residential components. But the goal here is to develop a really truly mixed-use urban development. The other one that we have here in Kingston is in downtown. It's at Harbour Street. It was also known as the former ice factory. It's around 2.8 acres. And we are now trying to come up with ideas to clearly understand what a best in value development strategy would be here for this site downtown, having discussions with the UDC to better understand what the entire waterfront redevelopment strategy is. But these sites, if you pass by, you will see that we have started pre-development work, pre-construction work. We have cleared those sites. We have demolished the buildings that were on these sites and getting them construction ready. Then the sites on the North Shore are fairly large. So we own parts of Windsor Estate. It's around 101 acres, where we're considering now a master plan residential community, again with different phases, but living on the water could be a very interesting aspect that we want to explore on that site. One of our most beautiful waterfront and beach properties is Reggae Beach. It's around a 275-acre site that stretches all the way inland, but it's a really, really, truly unique beach. There we are looking at getting a really strong hospitality partner to the table and to build out with an anchor development and different phases in residential developments. Then there's a site in Ocho Rios, which is known as the Ruins at the Fall. It's around 3.9 acres. We are studying now the opportunity there to really develop a urban hotel in Ocho Rios, business focus, but it's beautiful exposure to the waterfall there, the Turtle River, a really truly unique site in Ocho Rios. And the largest site that we're holding in our land bank is called Greencastle Estate. This is a 1,600-acre site, and it's the size, it's of an enormous size. So if you want to go and see the site, it will take you at least an entire day to travel around and understand what the boundaries of this estate are. So it's a unique site because it also raises up around 500 feet towards the inland and has beautiful coastal views, a coastline of around 3 miles, and also then direct views under the Blue Mountains. So that site we are really trying to curate programmatically to make a difference here, not only for our site, but for Jamaica. I've mentioned a kind of a timeline and development roadmap. So we are working ourselves from our Kingston properties all the way onto the North Shore with a development timeline. And some of the work that we have done already in this first year of pre-development work is really understanding the sites better, looking at geotech, looking at the site conditions, and starting on the business outlines. So what's expected over the next 12 to 18 months? So we're gonna we're gonna work and develop the first project, which is the industrial site at Ferry Pen. Then we will further complete the planning and pre-development work, technical studies and commercial studies for priority sites. We'll focus on development design concepts here for the sites in Kingston. And on the North Shore, we are working on a vision master plan to clearly understand the positioning and the opportunities that we have there for hospitality. At the same time, we're going to engage with operators, brands, investors, consultants to make sure we have a successful team here at the table. We will work on strengthening our development execution platform internally with internal sources and external partners. And once we get to a point where we will get to a point within this time frame to really prepare selected opportunities now for investment, partnership, and delivery decisions. So we're going to stay focused. We will remain very disciplined. Our goal is not to rush into any kind of announcements, but we will build up and make sure that we have investable, executable projects that can create durable shareholder value. And that concludes my presentation. Thank you so much. And I'm very excited to be part of this journey.
Good afternoon, everyone. I'm Tankita Chance Wilson, the Executive Director of the Barita Foundation, and I take great privilege in sharing with you how we have managed to turn the business's significant success into real impact, changing lives and developing communities. Now, our numbers on the screen reflect not just our spend, but our outcome. I will just highlight the first number, or over 3,200 beneficiaries, and we define our beneficiaries as people who would have been impacted positively through our work, either directly or indirectly. We take a very diversified and strategic approach to our work, in order that we can broaden our impact, but in a very focused way. We organize our work on the three pillars, and we've added a fourth for the purpose of this presentation to show our internal focus. Our first pillar is education and youth development, our second, entrepreneurship, our third, health and well-being, and we've added staff engagement to show again our internal focus. We're able to do what we do, not by ourselves, but through partnership. These partnerships allow us to deepen our collaborations, but also to multiply our spend. And we have on screen some of our partnerships that extend beyond our pillars, but certainly captures the objectives under each pillar. Our first pillar, I think I might have skipped. Our first pillar is education and youth development, and that pillar is where we spend the majority of our investment. And just to highlight that under our education pillar for the financial year, we would have reached over 2,000 persons, students, and educators who over 23, across 23 institutions island-wide. Our second pillar is entrepreneurship, and this most closely aligns with the core business of the company. Our third pillar is health and well-being, and this is where we're allowed to show our broad and compassionate approach to nation building through our charitable giving. To highlight a couple of things that we've done, we made a donation to the KPH renal unit of a device that allows for a 66% efficiency rate in treating with renal patients. So we're very, very excited and moved that we're able to do that. Fueling innovation and economic empowerment is also quite important to us. Again, we've been able to do that through partnerships with the local universities, as well as with our high schools, really building the future through our investment. Our purpose-driven workforce is not just focused on the numbers, but also focused on making a difference. We saw a 40% improvement in our internal participation rate, and we are tremendously grateful that we're living what we are preaching by having our own team participate in our initiatives. Our priorities for the year ahead, of course, Hurricane Melissa recovery and rebuilding efforts. We'll continue with that around as much as possible our 3 pillars: investing in education, our flagship program, or scholarship program, as well as working with our early childhood institutions. Strengthening our ESG commitment is also very important for us. Supporting our not just profits and people, but also planet. And then finally, our financial literacy thrust, and of course, focusing on purpose-driven giving. Finally, as I close, the foundation reaffirms our commitment to scale impact, deepen collaborations. So as we look ahead, our promise is simple. It's to keep turning this company's success into opportunity, resilience, and hope for a more inclusive Jamaica. Thank you so much.
Thank you. Let me thank each of our presenters. We will now commence the question and answer segment. Shareholders who wish to ask a question are invited to proceed to the designated microphones posted to you. We kindly ask that you state your names before posing your question. As previously advised, we have allotted 30 minutes for this segment to allow as many shareholders as possible an opportunity to participate. We kindly ask that each shareholder limit their questions to no more than 2. The question and answers period is now open.
Afternoon, my name is Ronald Archer. I already mentioned pertaining to online banking and AI. What is the implementation AI takes to prevent SQL injections and other forms of hacking or social engineering?
That sounds very technical.
This is Stefano, Chair. Where is he?
Coming through the door.
Or Ian.
Or Ian?
Yeah, but he probably didn't hear the question.
They didn't hear the question?
No.
As he comes forward, just repeat it for me.
Yes.
Oh, I heard you mention AI pertaining to online banking. What implementations does AI take to prevent SQL injections and other forms of hacking or social engineering?
Okay, great question. So I'll dig a little bit into it from the perspective of actual engineering. Our approach has been that AI is a companion to the people that build things, not a replacement, right? So AI is a tool. If you use it responsibly, the results are good. If you use it irresponsibly, the results are bad, right? So you've been able to see in market how things get built very quickly now. You can just prompt something and it'll give you an executable, but it probably won't take into consideration all of the security elements if you don't know how to ask for those security elements directly, right? So within our process, we always have a human in the loop, and we make sure that we're building within the correct constraints. So yes, AI is helping us move faster, but it doesn't mean that we have to cut corners. So we make sure that all of those risk mitigants continue to be in place, regardless of whether it's a person developing it, or we get assistance from an AI LLM. It still continues to go through the normal processes that make sure that we have the security that we need in place.
Thank you.
Good afternoon. I'm Douglas Wilson, a shareholder. Just first of all, to commend you on the presentations. They were very informative, very clear, and I like the direction that the company is going in. Even the auditor's report was very clear, Mr. Van Riel, and I appreciate that. But just need one little clarification. It was mentioned that you're entering into a strategic partnership. I think I might be wrong in the wording with Proven. I was wondering what is the benefit, why you're doing it, and how it will be done, how it will benefit the shareholders. I just wanted a little more clarification on that.
Thank you. Ramon, you want me to?
No problem. Thanks for the question. Okay, seems the mic is live. So it's a good question, right? Use this one. It's a good question. So as the chairman mentioned, and I think it was mentioned a couple other times during the presentation, Cornerstone, our ultimate parent company, would have entered into that partnership with Proven, right? And you can realize from looking at the composition of the Cornerstone group and from whatever you know about the Proven group, that both have very broad, diverse sets of investments, right? So the contemplation with respect to the partnership and how it will inure to the benefit of Barita investments is that in looking at the platform, there may be complementary skill sets, right? And I'll give a very clear example that has already started to work. So Bernard would have done a presentation just now on how we are focusing on advancing the investments that we have made in real estate assets. Proven, in turn, has had an established track record in converting development-ready lands into profitable output on the real estate front, right? Now, Bernard is extensively experienced in bringing ideas to reality on the real estate front. But I think all of us know in some way, shape, or form that real estate development and real estate in particular is very nuanced, right? So it varies from country to country. So we are benefiting through this partnership with Proven from their experience in developing real estate here in Jamaica. And that is being complemented by the vision, the expertise, the relationships that Bernard in turn is bringing to the table to unlock the value in the real estate that we have invested in as a group. So that is just one clear example of how we're collaborating to the benefit of Barita shareholders via this partnership. Right? And I hope that's clear. Of course, we can talk after if there are follow-on questions.
I believe there's another question in the corner over there.
Yeah, good afternoon. I am Natasha Baegan. My question is, well, my observance is many first degree or even associate degree graduates leave university are sitting at home unemployed, and which they have strong rhetorical knowledge, but they have limited practical experience. Can you elaborate on how those Barita Investments Limited even invest in developing these graduates into competent professionals while ensuring the high standards expected by clients and shareholders?
Thank you. That's a very interesting question, and it's something that I know is very real and present. Whilst Barita Foundation or Barita Investments Limited cannot, in a very holistic way, be responsible for that kind of heavy but real challenge, we do, through the foundation and through the human resource department as well, present opportunities for graduates at different levels. The foundation, for example, through our scholarship program that I shared in the presentation, offers scholarships at different levels that benefits both the scholars, the students, the parents, and as well as families. So we have scholarships from the PEP level all the way to the tertiary level, and we have those opportunities available for graduates as well as for people who are pursuing their education. Additionally, our support of non-governmental organizations and our partnerships with the different ministries also create that avenue for us to make investments in entities that are really focused and responsible for meeting and creating that safety net for persons who may have challenges or are unfortunately don't have access to the necessary resources.
Yeah, I've noticed on the board there is no youngster with a bachelor degree. Everyone have a master degree. Is it that you don't employ bachelor degree?
I only have a bachelor's degree.
Yeah, okay, that's one.
I think it's clear that we do our part in trying to develop the nation through not only physical assets but also the human asset, which is the most important asset in any country or organization. I think we just had two young gentlemen present on AI in terminology that went straight over over my head. Nation. So, I think if there's a particular challenge, we're more than happy to speak to you off air. But as an institution, we're quite proud with what we have done with the foundation. We've broadened it from primary school support throughout all levels of development. And, it's a point that we are very, very proud of and continue to invest in.
Good afternoon, over here.
Hi.
Hi, very good presentation today. Thank you very much. I am very excited about the developments and the move towards digital banking and the eventual rollout of BRIC by Barita. You already have the non-objection from the Bank of Jamaica. I would like to know what type of timeline are we working with here? How soon can we start seeing this being introduced to the public?
And you are?
Oh, my name is Kalila Reynolds. I'm with Money Media.
Thank you, Kalila.
Dean or Stefano, yeah.
Yes, thanks for the question.
Maybe that one's on now.
Thanks for the question, Kalila. So in terms of when we can see it, I mean, it's what I'll say is that we're on the cusp of it, right? I mean, we'll see that shortly. Now, importantly, what we're doing is a controlled rollout. We want to ensure that we roll out in phases because, the core of how we think about this is customer centricity. And a critical anchor of customer centricity is feedback. So we're rolling out in phases to get the feedback from our customers because at the end of the day, what we're developing, I mean, we've developed an MVP, but, what we're developing is really going to be one that is built for our customers. So we have started with understanding and really going out and listening to what our customers are saying and building on that basis. But as we continue to roll out and as we evolve that product, it's going to be a function of the feedback that we get from our customers. So it's going to be a controlled rollout. You see it very, very soon. And from there, it will evolve and eventually to a broader rollout.
Those words are very relative, the cusp and very, very soon. That could mean tomorrow for me, it could mean next year for somebody else. Can you just give us a clearer timeline? Days, months, weeks?
Well, what I'd say is that we're not talking in months. We're talking we're talking in weeks and days.
Thank you, Darwin. Afternoon, everyone.
Good afternoon.
I too have a first degree, but I'm now retired. I noticed everything is going digital. I didn't understand most of what was being said by the younger persons. What is being done for persons my age and older? We senior citizens who joined this company many years ago. We fit in.
Of course you fit in. You're the foundation of the organization. But let me ask Ramon to expound on that.
Let me come over that side.
Oh, I think it's now on.
Thank you, Chairman. Good afternoon. I'm looking through there. Thanks for your question and thanks for coming today. It's a very relevant question, right? Because of course, as things change, naturally there will be questions around what happened to how we do things now or how we used to do things. The truth is a big part of what Dean said is that our intention with respect to changing or actually enhancing how we interact with our customers is going to be a gradual one. Right? So a lot of what you currently anticipate or rather currently experience will remain. Admittedly, there are some components of it that we will phase out over time, but to the extent that we're phasing out something and we're transforming it from being a physical process to a digital process, I can promise you that there will be extensive training, interaction. We will be patient for those of you who like to do things a particular way. I am that way too, because we know that change is for some people uncomfortable. So rest assured, as the chairman said, our current clients are the foundation of our business. We're not going to transform the business into something that will alienate them. Instead, our only intention is to enhance how we do things with a view of delivering more value to you, better options. It's not for you to become a stranger to the place that you have called home for many years. We're mindful that we're almost 50 years old, right? And we have people who have been investing in us since 2010 when we listed and investing with us for many decades before that.
Pleasant good afternoon, Mr. Chairman. Lancel Bloomfield, shareholder. I have 3 questions. I want to start from the point of view of this digital money wallet first. I noticed that this company, I really admire the presentation and the fact that you have persons who are trained in IT. And one of the first concerns I have is when you have this AI thing being unloaded on third world countries from first world countries, it reminds me of the 70s and the 80s when a lot of things were dumped on us. And we never take the time to understand clearly what might be involved or what might come down the road. So I'm very skeptical about all this AI thing. So my question that I want to pose concerning the use of the digital money wallet is this. Since it has been announced by several companies, including this company, and I want to find out what is the cost to the user since this relies on a wide-scale use of broadband technology. What will it cost us as the user and consumer for the use of these digital money wallets? That's the first question.
Thank you very much for the question. So I'll start by addressing the AI portion. The responsible usage of AI is relevant not only here, but for the planet, right? For absolutely everyone. So when we look at how we roll things out, we evaluate things not only from the perspective of the technology, but who it's for, what impact it has, and how we do it in a safe, controlled mechanism. As far as the costs that you're asking about, the app itself is free to download. We've spoken about features like being able to send money to others. That is also free. And we're working on zero rating it, meaning that for the usage of this with the carriers that we have on island, Digicel and Flow, you don't need to have, you don't need to top up in order to be able to use it. That is a program that we're running in combination with them so that everybody can continue to have access to those services, regardless of whether they've topped up recently or not.
Thank you very much on it. But before you go, I have noticed that major businesses, including government entities and big private sector companies, don't have any systems in place to presently accommodate these digital money wallets. So how are we going to get by?
What system specifically are you referring to?
The system to use the money wallets to make any form of payments to transact any form of business with them.
Definitely. So we'll make more announcements on the specific partnerships that we're working on once we're ready to do so. But we recognize that any type of digital initiative for banking isn't complete if there isn't a reasonable bridge to physical mediums. So converting cash into a digital medium is something that we're working on very closely with one of our partners, and we'll talk about that when it's possible to do so. But what I want you to understand is that we're not looking at this as asking people to change everything about how they do things, but we're working with how people do things and adding the digital on top as an advantage. So the ask is not a complete change in behavior, but it is the expansion and more functionalities available. So for those who want to continue to use the other mechanisms, it's there. For people who want to adopt digital, it's also an available option.
Thank you, Enda. Page 140, note 20B, Mr. Chairman. In 2024, there is a 1.4 billion due from related parties. In 2025, this line item has increased to 2.240 billion. Who are these related parties? And why is it that there is no decrease in this line item?
Stephen? Just one moment. Let me just find the actual note itself on 20B. That's right. Okay, so if you turn to page 214 of the annual report, which is also page 83 of the financials, it gives a breakdown of the 2.24 there, as well as the prior year balance of 1.4 is also broken down. And what this indicates is that the growth has taken place at the ultimate parent company level, and you've had a reduction in the balance for other related entities. Those are the two balances that have significantly moved from 2024 to 2025. I think it's important to remember that these are a snapshot in time. So it will show you what the situation was on the 30th September 2025. But these are balances that will go up and go down from time to time between the companies. And so that balance lies with the ultimate parent of the group.
Okay, accepted. Last question. Page 205, note 10. Mr. Chairman, in 2024, your management fee was 900 million. In 2025, this line item remained the same at 900 million. Please clarify, why is this paid and to which party or group?
That fee is paid to BFGL in 2020. Well, partially. It changed from CUHJ, Cornerstone United Holdings Jamaica Limited, to Barita Financial Group Limited. If you recall, in the description of the reorganization, Cornerstone United Holdings Jamaica Limited as an entity was combined by the scheme of arrangement, court-approved scheme of arrangement, into Cornerstone Financial Holding Limited, which is now the group's ultimate parent company. And in that process, those persons who were employed to CUHJ and provided services to Barita Investments Limited became employees of Barita Financial Group Limited. So it is services related to the areas that are supported by those persons employed to BFGL. That's what that fee relates to. And you're correct, there's been no basis in the charge, no change in the basis for the charge between the 2 years.
So we will see this as an ongoing.
The fee will be there in future years. There may or may not be a change in the figure from time to time. But as between these 2 years, there was no change.
Okay, thank you very much.
You're welcome.
Thank you. Good afternoon. I am Javon Reed, a Money Media Fellow and a land economist with Estate O. My question is directed to Mr. Bernard Stocker. And in your presentation, sir, you said that Jamaica has all the ingredients for world-class real estate investment. So my question is, in your view, what's preventing us from realizing that potential? Is it financing? Is it the approval process, infrastructure, or does the country need a more institutional approach for real estate development?
Thank you. Very interesting question. So, real estate development on our end we are a private entity, and as so many other developers on the island, they buy land, they develop the land, they have to put together the financing and to come up with a product that makes sense for this market. I think it's always a question of scale, I would say. And for the development projects that we are targeting, yes, we want to work very closely with the government. We want to make sure that we have infrastructure in place that can support these developments. We're gonna need roads, we need energy, we need airports that can bring our potential buyers and tourists to this island. So it's always a combination of many factors, but I think we're in a very good position now to really have focus on bringing this to the attention. We have focused on sharing our development plans with you, that we think there's a huge potential for us to really elevate real estate and in Jamaica. But it's certainly not a concluded process, basically. We constantly have to work to position ourselves and to create an environment also on the financing side and on the infrastructure side that will allow these projects to be executed. But in our discussions now with the government, with external, financial co-investors or lenders, I think we all come to the conclusion that we have all the ingredients in place. Now we need to find the right formula, basically, to execute.
Thank you.
Are there any more questions or comments? Okay, well, thank you very much, shareholders, for those very insightful questions. I think that there were clear responses, and of course, we'll be open afterwards for any one-on-one conversations that you may have. Thank you. I will now proceed with the ordinary business of the AGM as outlined in the notice of the meeting. May I now ask a shareholder to propose the following resolution to receive and consider the director's report and financial statements for the year ended September 30th, 2025, and the report of the auditors thereon after it has been read by the company secretary.
Thank you, Mr. Chairman. The resolution 1 reads as follows: that the audited accounts, together with the reports of the directors and the auditors circulated with the notice convening the meeting, be and are hereby adopted.
Will a shareholder please propose the motion? Thank you. May I ask a shareholder to second the motion? Sorry, what's your name, sir? Josiah Williams, thank you. Shareholders, all in favor of the resolution, please indicate your vote by raising your hands. All against, please indicate your vote by raising your hand. The shareholders have voted in favor of the resolution. I declare the resolution carried. May I now ask a shareholder to propose the following resolution to approve and ratify the interim dividend payments and declare them final after it has been read by the company secretary.
Resolution number 2, that the interim dividend of $2.398 declared on September 29, 2025 and paid on October 31st, 2025 be treated on the recommendation of the directors as the final dividend for the financial year ended September 30th, 2025.
Will a shareholder please propose the motion? Thank you, Philip Lee. May I now have a shareholder second the motion? Thank you, Therese. Shareholders, all in favor of the resolution, please indicate your vote by raising your hands. All against, please indicate your vote by raising your hand. The shareholders have voted in favor of the resolution. I declare the resolution carried. We now turn to the re-election of directors. Article 93 of the Articles of Incorporation provides that 1/3 of the board, or if the number of directors is not 3 or a multiple of 3, then the number nearest to 1/3 shall retire from office at each annual general meeting. The directors retiring under this article are Messrs. Paul Simpson, James Godfrey, and Robert Drummond, with Messrs. Paul Simpson and Robert Drummond who being eligible offer themselves for re-election. May I ask a shareholder to propose the following resolution to retire and appoint directors under Article 93 of the Articles of Incorporation after it has been read by the company secretary?
Resolution 3A, that Director Paul Simpson, who retires by rotation and being eligible for re-election, be and is hereby re-elected a director of the company.
Will a shareholder please propose the motion? Thank you, Katrina. May I ask a shareholder to second the motion? Did I say Katrina? Carrie. Thank you, Dane. Shareholders, all in favor of the resolution, please indicate your vote by raising your hands. All against, please indicate your vote by raising your hands. The shareholders have voted in favor of the resolution. I declare the resolution carried. Also, Paul, yeah, okay. We now move to the next resolution. Madam Secretary.
Thank you, Mr. Chairman. Resolution 3B, set out in the Notice of Annual General Meeting, relates to the re-election of Director James Godfrey, who retires by rotation at this meeting and was eligible for re-election. Subsequent to the publication of the Notice of Annual General Meeting, Director Godfrey formally advised in writing that he does not wish to stand for re-election to the board. Accordingly, Resolution 3B will not be put before the meeting. On behalf of the board, and if I can say so, Mr. Chairman, I wish to express our sincere appreciation to Director Godfrey for his dedicated service, valuable contribution, and commitment to the company during his tenure. We thank him for his service and wish and extend our very best wishes for continued success in his future endeavors. Thank you, Mr. Godfrey.
May I ask a shareholder to propose the following resolution to retire and appoint Mr. Robert Drummond, who being eligible offers himself for re-election under Article 93 of the Articles of Incorporation after it has been read by the company secretary.
That Director Robert Drummond, who retires by rotation and being eligible for re-election, be and is hereby re-elected a director of the company.
Will a shareholder please propose the motion? Thank you. And seconded? Carried. Shareholders, all in favor of the resolution, please indicate your vote by raising your hands. All against, please indicate your vote by raising your hand. The shareholders have voted in favor of the resolution. I declare the resolution carried. May I now ask a shareholder to propose the following resolution to appoint auditors and authorize the directors to fix the remuneration of the auditors after it has been read by the company secretary.
Resolution number 4, that BDO, having agreed to continue to serve as auditors, be and are hereby appointed auditors of Barita Investments Limited to hold office until the next annual general meeting at a remuneration to be fixed by the directors of the company.
Will a shareholder please propose the motion? Thank you, Carl. May I now ask a shareholder to second the motion? Thank you, Philip. Phil. Shareholders, all in favor of the resolution, please indicate your vote by raising your hand. All against, please indicate by raising your hand. The shareholders have voted in favor of the resolution. I therefore declare the resolution carried. May I now ask a shareholder to propose the following resolution to approve and ratify the remuneration for the directors for the year ended September 30th, 2025, after it has been read by the company secretary.
Resolution number 5, that the amount included in the audited accounts for the company for the year ended September 30th, 2025, as remuneration for their services as directors, be and is hereby approved.
Will the shareholder please propose the motion? Thank you. May I now ask a shareholder to second the motion? Therese, thank you. Shareholders, all in favor of the resolution, please indicate your vote by raising your hand. All against, please indicate your vote by raising your hand. The shareholders have voted in favor of the resolution. I declare the resolution carried. Before proceeding to the final remarks and termination of the meeting, I wish to place before the meeting for consideration an additional matter of ordinary business. Article 91 of the Articles of Incorporation provides that directors appointed by the board to fill a vacancy or as an addition to the board since the last annual general meeting shall retire from office at the next annual general meeting. Dr. Marlene Street Forrest, having been appointed on February 13th, 2026, retires at this meeting and being eligible offers herself for re-election. Shareholders were notified of Dr. Street Forrest's appointment in the usual manner through the publication of a notice on the Jamaica Stock Exchange on February 19th, 2026. In addition, a brief profile of Dr. Street Forrest is being displayed on the screen for the information and perusal of attendees. Shareholders will be given 5 minutes to review Dr. Street Forrest's profile. Is it up?
Not quite yet.
Do we have her profile?
Seems the profile is it's okay.
That's it. Oh, I thought it was going to be our CV. As if we didn't know what Dr. Street Forrest looked like. May I ask a shareholder to propose the following resolution to retire and appoint directors under Article 93 of the Articles of Incorporation after it has been read by the company secretary?
That Director Marlene Street Forest, who retires under Article 91 and being eligible for re-election, be and is hereby re-elected a director of the company.
Will a shareholder please propose the motion? Thank you. Jason. May I now ask a shareholder to second this motion? Thank you. Stephen? Okay. Shareholders, all in favor of the resolution, please indicate your vote by raising your hand. All against, please indicate your vote by raising your hand. The shareholders have voted in favor of the resolution. I declare the resolution carried. Ladies and gentlemen, we have now come to the close of today's meeting. As you have heard throughout today's presentations and discussions, the past year has been one of both challenges and meaningful accomplishments. While navigating an evolving and often complex operating environment, your company has continued to demonstrate resilience, adaptability, and strong performance. Among the highlights were the successful acquisition of Barita Fund Managers Limited, the achievement of our financial holding company license, and the continued advancement of strategic initiatives in real estate and fintech. These milestones reflect our commitment to building a stronger, more diversified, and future-ready organization for you. Throughout this period, management has remained focused and disciplined in stewarding the company's resources, managing risks, and advancing our strategic priorities. Every decision has been guided by a commitment to building long-term sustainable value, delivering strong returns for you, our shareholders. We are grateful for your continued trust and support, which inspire us to keep striving for excellence and positioning the company for future growth and success. On behalf of the Board of Directors and management, I thank you for giving us your time, your engagement, your insights, and your unwavering commitment to Barita. We look forward to continuing this journey together and to building on the strong foundation that has been established for the benefit of all our shareholders. Finally, we recognize that there may have been some questions that we were unable to address within the time allotted for today's meeting. For shareholders whose questions remain unanswered and who have provided their email addresses, we will make every effort to provide a direct response within 10 working days. May I please have a shareholder move a motion for the termination of the AGM? Thank you, Stephen. May I have a shareholder second the motion? Thank you, Philip Lee. Thank you once again for joining us today. I now declare the 48th Annual General Meeting of Barita Investments Limited terminated. Thank you.